Good morning, everybody. Welcome back to another episode of The Market Open. It is Wednesday, August 7th, 8:47 a.m., and we are back once again. Thank you all for being here. We have a lot to discuss this morning. Headline deal of the day, Palantir just signed a very large partnership with Wendys. They came out this morning, so we got to break that down. We got to talk about that. Go deep into what that deal looks like. Really cool deal. TLDR, we are powering 6,000 stores worldwide in terms of the supply chain operations to make sure that the $5 biggie bag is operationally efficient when getting into people's stomachs. So we got a lot to talk about there. And the number two, which is what we're going to start off with. So I'm going to start off with this segment because this kind of frames the entire market that we're seeing right now, which is green, baby. And we're going to talk about why it's green. And then we'll get into the Palantir stuff, which is Japan. And I'm going to start off today's show. Thank you all for being here with this. You guys ready? All right, here we go. Kiniri o hikandaji kurte arigato gozaimasu nihon ginko. You didn't think your boy knew Japan. You didn't think your boy knew Japanese, right? Your boy knows Japanese. Your boy's been traveling across the world. And that means, I'm definitely not using ChatGPT right now. That means thank you, Bank of Japan, for not raising rates. Japan has saved the mother effing market. It is not too early for this shit. That was good Japanese. Don't, even though I practiced it 10 times and it still sounded horrible. I love Japan. I love Japan. And that's the first segment for today. That is going to frame everything that's going on today in the market. I love Japan. I love Japan. I love Japanese people. Japanese women are beautiful. Japan is amazing. I appreciate anime. I don't give a shit about anime, quite frankly. My Hero Academia, Death Note. Really, it's like, it was funny in high school. Like I was watching Dawson's Creek. Everyone else was watching anime, and they would be like, "Amit, are you watching this?" I'm like, "No, dude, you're watching cartoons. Like it's like SpongeBob SquarePants, but it's like more sexual." So I don't. So although I don't love anime, I appreciate anime, and I love the Japanese people. Last night, at approximately 8 p.m., the Bank of Japan, they come out, and we're going to show the numbers right now to show how like insane the U-turn was in terms of the reversal. This is why the market is green right now. And hopefully this, well, I don't even think hopefully. I think this is what sustains the recovery. I could be wrong. There could be other, factors that go there. But if the Bank of Japan is serious about what they said last night, I don't think the yen carry trade is going to be that big of a deal anymore. Again, it's contingent on the Bank of Japan being correct. Last night they came out and they said, hey, we're not raising rates. So they raised rates 2 weeks ago by 25 basis points. And why did that ruin everything? It strengthened the yen. It devalued the dollar. So everyone that was trading or that was borrowing yen had to pay more interest on the yen, which is why they started selling off US assets to be able to cover their interest, especially if they were on leverage or on margin. And that fucked everything. That like literally fucked everything. Last night, Bank of Japan, they came out and they said, you know what? This is a little bit of an unstable economy. So as you can see right here on the screen, we will not raise rates when the market is unstable. And as soon as this came out, as soon as the Bank of Japan said this, the Nikkei index immediately went up. It was down 3% at like 8 p.m. By 9 p.m. Take a look at this. Boom. Goes green. Immediately turns. Now it took a little bit. So when I tweeted this chart of USD JPY going up, which is why we want to see this go up, and I'll talk about why we want to see this go up in a second. But the Nikkei went from being down 3% to now being down 0.32%. Then 2 seconds later, I had to tweet this again because it was up 0.13%. And then literally 10 minutes later, I had to quote tweet that and say, actually, it's up 3%. That reversal sent the NASDAQ up 1%. It sent the S&P up 1%. It said IWM up 1%, the futures for all of those. And more importantly, it sent the VIX down 10%. Remember, the VIX was at 65. It was at 65 on Monday. Palantir went to 21. Robinhood went to 13. Like everything collapsed. S&P went to 507 because the VIX was the highest it's been in 4 years. The VIX right now has collapsed. Last night it was down 10%. This morning it is down 16%. We've got a 23 on the VIX. So I cannot say enough how much I love Japan. I mean, Again, we cannot underscore this. Japan not saying what they said last night. Japan was on track to go down again. That's why last night on the market close, if you were there, we stayed long last night, but by like 5:55-ish, you saw we had SMCI earnings, which weren't the best, and we'll talk about that in a second. Shopify's killing it today. Disney's killing it today. But SMCI started the downfall. Nvidia started falling. A bunch of stocks started falling, and then the whole market gave up pretty much all the gains that they got over the past day of the recovery. And then Bank of Japan and the Nikkei index started collapsing again. So you needed Bank of Japan. You really, really needed Bank of Japan. So why does this matter from a currency perspective? So let's just look at this real quick. USD to JPY, this thing needs to go up. And I said this last night on Twitter. The men only want one thing. And the only thing we want, the only thing I want in life, at least for the next 5 months, to end out this bull market and to hopefully get some really good gains, is to see this chart go up. I mean, like, if USD JPY keeps going up, now it's still down from 160 where it was at a month ago, but it's at 147, then the market continues to go higher. What is this chart? This chart is how many yen are equivalent to $1. The Japanese don't like that $1 equals 140, 150 yen. Everyone else in the world that is not the Bank of Japan really wants $1 to be worth like as much yen as possible, because that makes the carry trade more effective, that makes borrowing more effective, and it keeps the global economy really alive, because Japan doesn't collapse. Japan's debt to GDP ratio is over 200%, 260%. Them raising rates, and Chris talked about this the other day, them raising rates is more political than anything. Them raising rates is more so a question of the Japanese people feeling like their currency has more buying power. Unfortunately, Japan does not have the level of innovation that is needed to really propel their economy to astronomical heights, right? The Japanese people are amazing, smart people, tech entrepreneurs, but you don't have the Googles and Facebooks coming out of Japan. Quite frankly, they're not coming out of a lot of parts of the world. And so Japan, with the population crisis, along with the lack of real innovation, they had negative interest rates for a long time because they did not want you to put money in a bank. They wanted you to lose a lot of money. They wanted you to start investing and innovating. They get a little bit of inflation. They're like, we got to raise the rates. And that fucks over the yen, ruins the conversion with the dollar to the yen. All this global liquidity was foundational on this element. So what I think happened is Biden or Harris or Yellen, someone called up the Bank of Japan last night and they said, can you fix your little mistake here? Because Japan relies on everything else. And if you guys fuck over us, we're going to collapse. Everything collapses. And so that's why I think they changed. And as a result, now the market potentially might be saved. So that's what happened last night. And it was a big, big deal. This broke really at like 10 o'clock at night. And I couldn't sleep because everything started going higher. Robinhood is up 4.3% in the pre-markets right now. Nvidia up 2.21%. AMD took a nasty beating yesterday, up 2%. The NASDAQ, it's up 1.38%. The S&P is closing in on 528 right now, up 1.13%. Like all of the gains that we had at like 2:30 p.m. yesterday that went away by the nighttime after the market closed, Japan basically was able to reverse. Tesla's up a little bit right now. Palantir, again, we'll talk about their deal. Palantir back at $27. Amazon's up 2%. Carnival Cruise up 2%. IWM 1.6%. IWM not looking that crazy at 198 anymore. Now it's at 207. Bitcoin mooned on this because that means more liquidity is entering the system and Japan is not creating a sell-off of risk assets, which is what Bitcoin is. And so there you go. I love Japan. I absolutely love Japan. I literally called Chris at that moment. As soon as this news happened, I was like, Chris, they just said they're not fucking raising the rates, Chris. They're not raising the rates, Chris. Chris was like, yeah, I had a feeling they weren't going to raise the rates. Dude, I was so happy. I went downstairs. I went to my dad. I'm like, Dad, Japan just saved us. And my dad's like, what do you talk about? And then I try to explain this macro stuff to my dad, and he like, he listens to me and he acts like he's interested and he wants to know, but like he really doesn't comprehend. He doesn't really care that much. So he's just like, this is good, right? I was like, this is really good. This is really good. And they did this right before Robinhood earnings. They did this right before Robinhood earnings. Robinhood could have a blowout quarter if Japan decides to keep raising the rates. It doesn't matter. It's just not going to move. A lot of stocks are not going to move. So the fact that they did this right before Robinhood's quarter, I mean, it was amazing. It was absolutely amazing. Meet Kevin has the opposite reaction due to sour with the Bank of Japan. Okay, so yeah, let's look at the bear case now. Let's look at the bear case. So I gave you the bull case. I gave you guys 9 minutes of the bull case. I gave you guys beautiful Japanese language. Let me give you another one. Hana yori dango. Dumplings over flowers. What does that mean? Practical things are more important than aesthetics. Okay. Nara korobi yaoki. Fall 7 times, stand up 8, baby. This is what I'm talking about. So what is the bear case? Well, the bear case is that Japan is just continuing to allow the carry yen trade to obviously continue. And that's going to inevitably lead to some type of pain. And as a result of that, Japan's basically delaying the broader problem, which is that their currency is being heavily devalued against the dollar by them keeping rates low. And as a result, Japan is going to still have the same political problem that they're having. And the yen carry trade will only get more attractive to people that want to load up on leverage. I could imagine 5 months ago, I'm like going to the store to like get a drink, and there's some random dude in Japan borrowing $5 million worth of yen, converting it into USD, then going max leverage on Bitcoin. And maybe that trade worked out well if they did it like in January, but I could just imagine us living our normal lives and then random traders around the world are borrowing yen. Like it is crazy how many people engaged in this trade. I've gotten so many messages about like trying to explain this trade. So the mainstream is starting to understand what's happening. I was in the sauna 2 days ago. I forgot to mention this. I was in the sauna 2 days ago, and I stepped in the sauna. 2 minutes later, the guy's like, wow, Japan's really fucking everything up. And I started laughing in the sauna. I was like, I cannot believe the one place I go to forget about stocks, the gym, these motherfuckers are talking about the yen carry trade in the sauna. So obviously it's become a big deal. I don't necessarily think it's the most bearish thing in the world. It's bearish if you're already bearish on the market. If you're bearish on the market and you feel like the market's a bubble, you think AI is a bubble, you think earnings are a bubble, you think the consumer's struggling, and you think Japan only makes this worse, then you're bearish on this. Maybe it will be a problem. But if that problem does end up coming to light, which, by the way, if this was only raised for political reasons and Japan just has to stop being so political, aka making their citizens feel that their currency is so valuable, then like maybe they just swipe that under the rug. And if it was a political reason, not an economic reason that they raised rates, then I don't think that has to come to fruition over the next couple of years. Now, if it was an economic reason and there's something underlying that's going on and the yen carry trade is getting really bad and it's like getting really propped up and it's just a bubble, then maybe it'll get popped. But let it pop in 2025. Okay, just let it fucking, I don't care. Let it pop in 2025. Let me make my cash in 2024. We'll deal with that later. I think for the next couple months, I think this means we're okay. I think this might mean we're okay. So we'll see. Thomas says, I think Kevin was just upset because he was calling for a 60% crash yesterday. Yeah, well, it wasn't just Kevin, dude. I mean, when the Nikkei fell 3% last night, all the big Twitter bear accounts, they came out and they were like, see, it's going down, it's going bad. Things are still going to be like, Nikkei is collapsing again. This was a dead cat bounce. All the people that said it was a dead cat bounce, I don't know, man. I think they're a little upset right now. Amit, we need to go to Japan to celebrate. We absolutely do, dude. We need to go to Tokyo. We need to get some like real sushi. I've only had American sushi. I need real sushi in my life. And we need to celebrate, because if the Bank of Japan is serious about this, and I know some people are like, oh, well, this isn't healthy for the markets, yada, yada. At the end of the day, again, and I'm still trying to learn more about this, so I'm not like fully educated on what this means for them to pause rates. But if it was, as Chris was saying on the stream a couple days ago, if this was political, if they only raised rates because they wanted Japanese consumers to feel as if their currency was more valuable when they were buying foreign goods, and they didn't need to do this because realistically, them raising rates, does that lower Japan's debt to GDP ratio at 260%? Ours is over 100%, by the way. So ours is bad. Japan's is really bad. Them screwing over the global economy does not make things better. So I don't know if it's the most unhealthy thing for them to keep rates at this level. If anything, I think it's more healthy than not if the core logic behind raising rates was political. S&P at 528 right now. And if that's the case, maybe this is going to be very, very good for the broader markets. Martin says, I never knew how big Japan is. It would stretch the entire East Coast. So, dude, I have not thought about Japan as much as I've thought about them in the past week. And this is the cool thing about being an investor and caring about the markets, is like you have to learn about the yen carry trade. You have to learn about why unemployment data matters in the context of interest rates. Like the past 2 years has been just an incredible journey of learning things and gaining knowledge. But I've just never cared about Japan as much as I've cared in the past month. And I've never loved Japan more than I have over the past 24 hours. I'm telling you, if Bank of Japan came out yesterday and they said, we think we need to still raise rates, we would have a probably 5% down market. Not 5%, probably like 2% that turns into 5% over the next couple of days, because then there's no end in sight for the yen strengthening and the dollar being further devalued. And then you could probably kiss the bull market at least goodbye for a while until that gets under control. Within 2 days, it seems like Bank of Japan resolved a lot of these concerns. And that's why That's why the market's doing well right now. So that's what we got. That's what we got. Again, Japan has way too much debt on their balance sheets to be engaging in this stuff like raising rates by 25 bips, especially when they were negative for so long. And honestly, I don't blame that many people that got caught up in the yen carry trade. Like if you were max leverage, okay, like that's stupid. But for like the past 15 years, people have seen negative to 0% interest rates in Japan. That changes overnight. Really? For political reasons, to make your currency a little stronger so Japanese people don't feel that bad? Like, no, like there's got to be a bet. Like you've got to encourage innovation in Japan to find the next Google, the next Amazon in Japan. I know that's hard to do. I know most countries haven't been able to do it. This is why for all the people that hate America or think America sucks at the only reason the American economy is amazing is because we have people that are willing to go out into the world, build shit that ends up impacting the world and create trillions of dollars of wealth. Not every country has that culture. And Japan's been trying to initiate that culture. It's just very hard to do. There's something about that American spirit and American dream. So I think Japan needs to focus more on innovation, and it's hard, right, with the population decline versus raising rates to get out of this problem. And so that was the news that happened last night. I love Japan. Seems like they saved the markets for now, and we'll see what happens as the market opens. All right, let's talk about Palantir. Let's talk about Palantir. We had Airbnb earnings yesterday. They got schmacked. Uber did really good a couple days ago. Disney did good this morning, however. So let me do quick earnings real quick, and then we'll go deeper into earnings. But just high level overview: Disney is down 1.86%. The reason Disney's down is because of because their consumer part of their travel and experiences, like the parks. They said the consumer's weakening there. So entertainment's good. They beat EPS by 30%. The consumer's weakening in traveling to the parks, which is, again, another argument that the consumer is a little struggling. We'll go deeper into that, but that is one argument for why Disney is down a little bit. Then you had Shopify. Again, this tells the opposite story. Shopify's up 17%. Shopify, my biggest concern with Shopify is the consumer struggling? Shopify growing 23% year over year. They're like, nope, the consumer's great. People are buying a ton of shit online. And so you've got Disney saying, hey, we don't have people coming to the parks as much. We have Shopify saying, hey, we have more orders than we can handle. And it kind of begs the question, do people just not like going to Disney parks anymore? Again, it's this narrative this entire quarter has been, do people just not like Starbucks? Do people just not like Nike? Do people just not like Disney? Or are these consumer staple brands so iconic that if they're not putting up the numbers, it means there truly is a weakening consumer? I think that question is still up for debate. And we're going to have to try to figure that out over the next few weeks. The market's definitely trying to figure that out right now. SMCI, we'll talk more about later. They're down 13%. They raised guidance by $4 billion. The only reason they're down is because of their margins, which actually makes sense. But forget SMCI. Sorry if you own SMCI. It is down. Maybe worth adding on the dip. I'll show you guys the bull case on it in a second. But again, you got to live with 11% gross margins if you're going to buy that dip. NVIDIA probably is going to have an amazing quarter if SMCI had to raise their full year guidance by $4 billion. SMCI is servicing NVIDIA's GPUs. They can only raise guidance by $4 billion if they have a lot more GPUs to serve. The only reason they're servicing those GPUs is because NVIDIA is selling more of those GPUs. So I think the correlation there is like logical. It makes sense. And that should probably be very good for NVIDIA. So we'll keep going from there. Substitute, thank you for the $9.99 super chat. Nana Korobi Yaoki. Dude, I was looking up so much Japanese shit on ChatGPT today. Well, that was a good use case. That was a really good use case with ChatGPT. I know people are struggling for use cases. I was like, give me 5 popular Japanese sayings. Boom. I got it. And it's like, dude, I can't imagine Googling this and like finding some website that would do this. Like ChatGPT was perfect for this. So that was a good use case. But the Bank of Japan really, really did help this morning. Amid thinking of buying Hood before earnings, thoughts on this? Look, I've said it like I said yesterday. I think 17 is stupid. I think Hood after earnings, now that Japan saved the market, I don't know if it's going back to 22, but I think it belongs at 22. So I could be wrong. This thing could tank and something could happen. I don't think the quarter is going to be bad. So if they tank, I think it's for something external. But all the analysts are bullish. They got a bunch of price target upgrades the other day. It's like $30, $24, $25. 29 from Wolf Research. Another one got them like 22, 23. I just think 17 is stupid, dude. And it was stupid at 14, stupid at 15, stupid at 17. So we'll see. I'm bullish on it, but obviously after earnings, we'll see what they put up today. 3:30, I'll be live and we'll preview Robinhood earnings today. And we'll see what happens. We'll see what happens with Robinhood. All right, so Palantir. Let's get into Palantir. Palantir signs a brand new deal with Wendys. This deal was exciting, dude. This deal, I have not seen people the most excited for a Palantir deal in a long time. I mean, the last time people were this excited was the Kohl's partnership, and the Kohl's partnership was because we got the Aussies excited, probably because of my Australian accent. But outside of that, from the farm to the frosty, Palantir and Wendys partner on AI and supply chain digitization. Let me say something, guys. I've been bullish on Palantir for a while. Obviously, we've been covering it. You do a daily Palantir show every single day. I think there is a very realistic chance, and I don't think this is just euphoria speaking, because I think I'm the most objective person when it comes to Palantir. I think there's a real shot these guys are $50 by the end of next year. And the reason I'm saying this is because they just had 27% year-over-year growth. The Wendys deal is not why I'm saying this. The Wendys deal is awesome. The Wendys deal is just an embodiment of the fact that they are signing really big deals that are powering really important institutions. As a result of that, the growth, which has always been the biggest concern, hey, why is it only growing 20% year over year, blah, 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 it's at 27%. What do you think is going to happen by Q2 2025? You think they're going to be growing at 22%, 21%? No, dude, they're going to 30%, if not 34, 35, 40%. And I don't want to be super exuberant here, but my point is, if you listen to Karp on the earnings call and you listen to Sham and you're learning about their new product, they are not slowing down. They are not trying to, stay at this 27% level. They are trying to accelerate. Now, do they get to top line 30% in a year? I think so. Do they get to 35, 40? That one is a little bit of a stretch. We'll see if it gets there. But if the market already gives Palantir a premium because of, Palantir is just cool, and we talked about the cool premium for a long time, I don't understand why, if Palantir is growing free cash flow margins, adjusted operating income margins closer to 40%, and then top line ARR at 30%, which the only companies that are really doing that, by the way, are Crowdstrike. And look at the premium Crowdstrike had before its PR fiasco. There's not that many companies in the world doing that. It's Palantir. And so if we get into a bull market in 2025, which that's also another variable, if we have a bear market recession in 2025, then we're not going to be anywhere near $50. But if we get a bull market, I mean, I think 35 end of year, that's my new price target. That is all contingent on the market holding up. Japan played a big role of that last night. But what are we thinking is going to happen in Q3 earnings? They're going to put up more than $700 million of revenue. They're going to put up the most net income they put up in 7 quarters, just like they did in this quarter. We are just in the infancy of acceleration on Palantir. And so as a result of that, I think we're going higher, dude. 25 used to feel like a little bit of a stretch buying it a quarter ago, just because the growth was back at 21, 22. Now, if you sell puts at 25, I think you collect the premium and you hope you get assigned. And if you get assigned, you say, okay, give me shares at $25. Like, it's not that big of a deal. And if it gets back down to 21, 22, like it did when the VIX was freaking 65 for no reason the other day, you buy at 21. Like, that's just, it's stupid at those multiples. And it wasn't stupid at those multiples in November of 2023. Remember, the insiders were selling at $21 and we're like, oh my God, we'll never get above 20. Now it's like getting to 20 would be a blessing. And that's what's supposed to happen. A company's supposed to progress where the dips are supposed to look so juicy because the progress has gotten so much better. And I think that's what's happening with Palantir. Okay, so on the actual partnership, Wendys will be using Palantir's AIP for supply chain management and actually building out their entire supply chain ecosystem along with demand allocation. Let me pull up the exact PR real quick. So here is the PR from the farm to the frosty. Now, we knew Palantir was working with Wendys. Actually, I found a video that I made 2 years ago where I was speculating on that. I just typed in Wendys and Palantir in Google, and I found a video I made 2 years ago. So we knew this was in the works for a long time, and now it is official. The partnership will bring the QSCCC, which is the Quality Supply Chain Co-op of Wendys, towards a fully integrated supply chain network, as well as opportunities for AI-driven automated workflows, as well as the future of Wendys' connected ecosystem for suppliers, distributors, and restaurants. This is going to be happening at 6,400 restaurants in the United States and Canada. Next time you go to a Wendys across the world and you get your chicken nuggets or your Baconator, hopefully with no mayo. If anyone puts mayo on a Baconator, you have problems. And if I ever go on a date with a girl at Wendys, I will marry her if she says that she wants the burger without any mayo. If you go to a Wendys, it's because Palantir is making sure that Baconator has the correct patties, the correct lettuce, the correct bacon, etc., to go into your stomach. I mean, that's a cool thing, dude. That's a really cool deal. And I think that's why people are freaking out about this deal, because this is a premier American brand partnering with a tech company that's really starting to do some damage. The platform is designed to connect disparate data sources into a single common operating picture, enabling both technical and non-technical users to quickly make decisions, evaluate their efficacy, and build custom modular applications. So dynamic inventory management, variance and gain information on restaurants, demand deviation, allocation, enabling organizations to use LLMs. Wendy's president says, together with Palantir, we're unlocking the inherent power of supply chain ecosystem to drive new and compelling sales operating efficiencies that will provide Wendy's with a distinctive edge in the industry. The edge is what matters. McDonald's and Burger King, to my understanding, they don't have Palantir, and Wendy's likes that because Wendy's is going to be using Palantir to try to get a distinctive edge, as the CEO says, across their competitors. Ted Mabry, head of global commercial, says, we're proud to partner with Wendy's and support the co-op's digital transformation for the benefit of restaurant operators, suppliers, and distributors alike. Our AI operating system powers many of America's most important companies, giving them the technology-driven competitive advantage, and we are excited to continue to grow in the QSR sector with this iconic brand and ambitious vision. There you go. There you go for Wendy's. Now, why do I think this is a big deal? We've seen Palantir partner with governments. We've seen Palantir partner with hospitals. We've seen Palantir partners with energy companies. We had a TES energy deal a week ago. We've seen the space companies with Starlab and Voyager a month ago. Like the retailers, Kohl's in Australia. The diversity of partnerships we've had this year is magnified by the growth we've had, because you don't have the diversity of deals unless you have the top line growth to support it. The customer count continued to increase 83% year over year. I mean, what do we think is going to happen when Palantir starts monetizing AIP at scale? Like this is going to be, I think, a really cool growth story that a lot of people actually care about now because they're putting up the numbers. And as a result, hopefully there is more momentum in the context of Palantir. What do you guys think? What do you guys think of this deal? So let me read some comments. I dip my French fries in mayo. Can someone ban Danny Dimes in the chat? Can we get a mod to like take some executive action there? This is dip fries in mayo is, I would respect it more if you said mayo and ketchup. Like I understand that. Still disgusting. I understand it though. But mayo is ridiculous. Amit, don't hype the stock too much. I have covered calls. Well, look, I still think there will be a way to navigate the stock, because I don't think the stock's just going to go straight to the moon. Stock's still up 70% year to date. So I do think like getting to 35 by the end of the year, you're going to need a real bull market. Don't get me wrong. And I think you need higher than 5,600 on the S&P. So we need to recover everything we lost. Maybe we do. I think we do. But Palantir is up a lot year to date. And if it ended at this level, I wouldn't be upset at all. If it ended at $26, because still it's done incredibly well this year. Yeah, it seems like you guys are excited. On Twitter, people are going crazy, dude. I mean, because Wendy's is just an amazing brand. Wendy's is an amazing brand. People are excited. Dipping your fries in Frosty, I get it. I would never dip my fries in my Frosty. I don't understand this obsession people have of mixing ice cream with like a real food. No, dude. It's like I was watching Prison Break last night, and the guard in Prison Break, he was dipping his fries in his Frosty, and I was just like, I was about to vomit watching that. I was like, dude, some people think I'm a picky eater. Okay, I'm not a picky eater. I'm not a picky guy. The one thing I want is for USD JPY to go up. That's all I care about. And to not have mayo in any of my food. That's it. That's all I care about. Bellic, yes. Shout out to Sanjay. Dude, Prison Break I watched it a decade ago. I'm really enjoying it again. And it's a good show if I watch it, because my attention span is hard for shows. So I actually enjoy that show. So it's not too bad. Oh, Argus Research upgrades Palantir to 32. And this is what's going to happen, folks. The upgrades are going to come in. Let me see if I can find that right now. By the way, I did post the Bank of America update on Twitter yesterday, the entire report. Shout out to Andrew, the guy who sent it to me. $30 is the new price target, up from 28. Let's see if I can find that $32 price target on Twitter. I'll try to find that, but they had 29. Now they have 32. This is what's going to happen. We're going to start to see the upgrades come in, because institutions are not going to ignore these types of deals. Ray, thank you for the super chat. Join the resistance, friends. Mayonnaise forever. It's not a resistance. It's something that needs to be banned from the world completely. Amid any new insights into Operation Warp Speed? So that's the new product that Palantir launched. It's just called Warp Speed. I will have more coverage on that next week. I still have to do my Palantir recap video. That's going to be out today. I didn't want to release it yesterday because the market close ended kind of late. So that'll be out probably in a few hours. I'll go through all Palantir earnings, and then we'll talk about the Warp Speed product probably next week as we get more information on that as well. All right, so there you go. That is the Palantir Wendy's deal. Congrats to shareholders. Big deal. Don't know if the stock's going to react to it. We have 15 minutes until the market opens. Palantir right here, 26.98 in the pre-market. So we're up 1.51%. I think that's more because of Japan, less because of Wendy's, but still an important deal. Now, Wendy's is a public company, W-E-N, when. Stock's down year to date, so has not had the best year. Stock was at Stock was at, in the beginning of the year, it was 19. Now it's 16. So, not the best year over the past 5 years. Oh, wow. Yeah. Wendy's is flat, but it pays you a 6% dividend. So it's a dividend payer. Market cap of 3.4 billion. Interesting. Market cap of 3 billion. Dividend yield of 6%. Interesting. Price to sales of 1.6. Maybe we'll look more at Wendy's. Lyft is one I think we do have to look at because they had earnings as well. But that's what we have for Palantir and Wendy's. Now, real quick on Lyft. I saw the Lyft CEO speak this morning. Lyft is down 14%. There's some problems around guidance, but overall, Lyft, adding to this argument about the consumer, now we're transitioning a bit more to macro. Lyft said the consumer is doing great. Lyft said the consumer is doing fine. And Lyft has become profitable for the first time. So Lyft, I am not buying it at all. I don't really like this industry, but it's down 14% after they raised free cash flow guidance and they became profitable for the first time ever after 5 years, really after 10 years of being a business, but after 5 years of being public. I don't know exactly why they're down 14%. I have to go deeper into that, but I mean, they're profitable for the first time. So at $9, market cap is closer to 3 billion. I got to look at the numbers. Price of sales is less than 1. I think there's something to look at. The problem is I don't think the market considers Lyft a growth story. I think they're afraid of Tesla with robotaxis, and Uber is obviously the big daddy here when it comes to ride sharing. Even though I thought the CEO today on CNBC, I thought he gave me the right impression. I mean, like, it was way better than RJ from Rivian, who needed some crack last night to get excited. I mean, that dude, like, you cannot get a word out of him without sounding like the most monotone CEO on the planet. But Lyft CEO was awesome. He was great. Even though his stock was catering in front of him, he was just like, well, we had a great quarter. So something to look at when it comes to Lyft. But they said the consumer is strong. Disney said the consumer is a little bit weakening when it comes to the parks business. And then Uber said the consumer is strong. So again, we're trying, and Shake Shack, by the way, yesterday said the consumer is strong. Shake Shack up another 1.6%. They're up 36% year to date. So I think this narrative around the consumer is something that we're all going to have to think about a lot more and try to figure out in terms of what's true and what's not true as well. Would you buy Broadcom or Palantir right now? I mean, look, I don't know as much about Broadcom. I would obviously buy Palantir. I just understand the company better. But Broadcom, I don't think is a horrible buy. Now let's talk about going from Broadcom to SMCI. Let's discuss that. So SMCI had a good earnings. They had a good earnings. The problem is they had a bad gross margin read. And that gross margin read is what messed up everything. So SMCI had gross margins of 15% last year. Now they have 11%. This is why they missed on EPS. The street wanted $8. They put up $6. So when you miss by $2 on EPS estimates, your stock's going to tank. It was up 15% on the guidance. And then the street looked at the EPS and they sent it down 11%, which is why all the semis are struggling right now in the pre-market, including Broadcom. SMCI right here down 14% now at $530. They did announce a 10-for-1 split, so you'll be able to buy this at $50 if they are at this trading range when they split. But the most important thing is SMCI. The street wanted $23 billion. For those that care about NVIDIA, which should be all of us because the market is still contingent right now on NVIDIA, SMCI said they're going to do $26 to $30 billion. Last year, they said they would do $9 billion of revenue. They ended up doing 15. They beat by $6 billion. This time, they're warning you they're going to beat by $4 billion. Most likely, they're probably going to beat by $5 to $6 billion if they're just given their historical trajectory of beats. And that's what a lot of the analysts who have been following SMCI for a long time on Twitter, not the Wall Street analysts, but some of the other OGs of SMCI, that's what they were talking about last night. And so it's kind of like, well, wait a second. If they're raising guidance, let's just assume on the low end by only $3 billion, 23 to 26 billion, they're going to do a minimum of a $3 billion beat. That has got to be good for NVIDIA's full year, fiscal year 2025 sales. I know people are thinking, well, demand or growth is definitely going to slow down for NVIDIA, and it will. It's not going to be 282% top line. But if it doesn't go to 30% and it kind of stabilizes at 70% over the next 5 quarters, their EPS estimates are still going to get to $5, and it's trading at 21 times EPS. That's still cheap right now, if you assume that they do $5 of EPS. So I think this is super, super bullish of NVIDIA. SMCI, unfortunately, if you're buying the stock, you're buying a semi with crappy gross margins. That's just the reality of it. So you're buying growth, but you're not buying gross margins. I think the read here, the proxy is if SMCI is showing that demand is heating up for GPUs and serving those GPUs, then that's good for Dell, and that's obviously good for NVIDIA. Now, the problem with Dell, same problem with SMCI, Dell has 0% operating margins. They don't make a single dollar on the $3 billion of demand that they've received in the past 90 days from all this GPU storage or servicing that they need to do. So the CEO on the earnings call for Dell, Michael Dell, he was like, hey, the operating margins will increase, but right now we're just trying to deal with the onslaught of demand that we got, which is why the stock is up. But it's also why the stock is down from $180, down cut in half, because they can't make any money on this. And same thing with SMCI. So I think all of these are just proxies to go long NVIDIA, which, by the way, has gross margins of 77%, and that's accelerating, not 11%, which is why NVIDIA is up right now in the pre-market 2.5% over the hardware companies when it comes to this AI revolution build out. So good for NVIDIA, not the best for SMCI. Amit doesn't know what crack does. Look, I've never done crack, but I know it gets you excited. I mean, that's dude. We were watching Rivian CEO. I know he's a smart guy. I'm just messing around. Obviously, he's running a $15 billion company. Impressive guy, but dude, he just like it was hard to listen. It's like he didn't want to talk or something. It was weird. And usually if you're a public CEO, you got to be excited. You got to get people excited. This is why I appreciate Carp so much. He gets you excited at the end of the day, and getting people excited already is the hard part. So overall, Rivian also, they lost more money. That's probably why Rivian's down. Rivian right now in the pre-markets is down. Rivian, yeah, they're down 8%. So Rivian, they lost 1.4 billion this quarter. Last quarter this year, they lost 1.2 billion. They got a lot of money from Volkswagen, the $5 billion injection of capital. They're still losing money because their gross margins are negative. Until that changes, Rivian, is going to struggle. However, if you got the lows at Rivian at $8, now it's 14, 13. So you've still done well this year, even though they're losing money because it was trading below cash at $8. So that's what we've got going on in the context of the macro. Let me see the 10-year right now. Where's the 10-year reacting from Japan? 10 years up a little bit. Okay. That makes sense because the 10-year had a dramatic decline a couple of days ago. Oil prices right now are up a little bit. That also makes sense because oil was down almost 10% over the past month. Oil's at 2%. I think on August CPI, which is really July CPI that comes out next week, I think we get a 2-handle on inflation. And if we get a 2-handle on inflation, dude, if we get a 2-handle on inflation, I think the market's going to seriously price in the rate cut at that point. And I think we're going to keep winning. I think we're going to keep winning, especially now that Japan has calmed down the market. So it really depends on what that CPI looks like, but I think we should be in a good space. Amit, I think Robinhood can hit $30 by the end of the year if everything goes well. Market cap is stupid. I agree. We got Robinhood earnings today. I'll be live at 3:30. You guys know my thoughts on it. I've done, plenty of analysis on it. So I'm bullish for this quarter, and I think they do well. I think deposits are record deposits, $12 billion, or at least more than 11.2 billion. I think revenue is closer to 630 million. They're going to be record profitability. They had 15 cents last quarter. Maybe they have 14, 15 cents, maybe 16 cents this quarter. If they really surprise, maybe we get 20 cents. Probably 14 to 18, it would be my guess. The one thing people underestimate about Robinhood is in Q2, they bought a company called Say Technologies 2 years ago. That company conducts shareholder meetings and shareholder votes across the entire stock market. They print revenue in Q2. So they're probably going to put up like 60 to 65 million in other revenues. That includes gold plus their Say Technologies revenue. That's what's going to give them the beat, even if crypto comes in weak. And then if they have more announcements, like the web trading app is out, the new user interface is out, they announce more things with the credit card. I think there's a lot of shit. The gold subscribers, I think we hopefully get closer to 2 million, if not 1.95 million. Like, I think the numbers across the board are going to be exceptional. It's just a question of if the market's going to be able to manage that. Chris says, I've been adding a ton into Robinhood. Yeah, I don't think he means Robinhood stock, but he means like just putting money into the platform. I think deposits are going to grow, man. They're going to do more than 11.2 billion, which is what they did last quarter. Think about that, dude. Think about that. 12 billion, even 11 billion for a small little trading platform. $11 billion in a quarter. Like, that's not easy, dude. Deposits are the lifeline of every fintech. That's not easy. And so I think those numbers are going to be by the street. And we'll see some more momentum. Let's listen to Bank of America and their thesis for why the economy should continue to stay strong.
Investors wondering if this summer's rotation in the small cap stocks is over. Join us now, Jill Carey Hall, B of A Global Research Senior U.S. Equity Strategist and Head of U.S. Small and Mid Cap Strategy. Like so many things, Joe, it's something can happen and it can be exactly what you want, but then it usually has like a but. It's got a but. But at the same time, this is everything. So we thought that inflation slowing would allow the Fed to cut rates, which would be good eventually for the small caps. So we started seeing the rotation. But if they're cutting much more quickly than they thought, or needed an emergency cut, or needed 50 basis points, then you're talking about an economy that's actually slowing, which would hit the E side of the small caps. So how do you gauge which is a headwind, and is it the headwind always worse than the tailwinds, or the tailwinds can win out? How does it work?
Right. Yeah, we talked to a lot of investors, and I think the Fed and confidence in the Fed cutting was sort of one necessary condition that investors were looking for to get more bullish on small caps, and that's what we saw as one of the key drivers of the rally.
Yeah.
The other thing that we've been highlighting for the last several weeks that we think is sort of the other necessary condition for the rally to be sustained is if we see an improvement in the fundamental story, because I think what's worrisome is that in the beginning of the year, everyone was expecting that by this quarter, small cap profits would have recovered, been positive, been outpacing large caps. That hasn't happened. Estimates have continued to get revised down for small caps. So there's a big expected pickup in profits growth in the fourth quarter that we don't know if it's going to materialize. And trends this earnings season haven't been that great. Guidance has been much weaker for small caps. Sales have missed. We've seen a record negative spread in corporate sentiment on earnings calls between small and large caps in the history of the data we've been tracking. So I think until we can see a shift in those fundamental trends for small caps, we've been saying the rally could stall. If we see a better shift, and obviously watching the macro data, as you mentioned as well, because indicators like the ISM have been declining. That's a very correlated one with small caps. We're still not expecting a recession or recessionary rate cuts. No, still expecting a soft landing, so still expecting the economy to remain resilient. But small caps have been in this earnings recession that just never quite recovered the way that large caps are now starting to. So, the economic data will be important for that.
Well, it sounds like you're saying that the rate cuts are what you were hoping for and what you were expecting. Maybe 25, two of those before the end of the year. That'll allow. That would mean the economy stays soft landing, it doesn't, no recession. So that the earnings numbers for the small caps should be expected to be okay or improve.
So I think Bank of America is right about this. I think Tom Lee's right about this. It is just a question on, is it going to be individual small caps or is it going to be the whole Russell? And I think that's the premier debate. Is it actually IWM as a whole? Or is there too many crappy companies in there where the earnings growth is not going to be enough, even if you get a rate cut? And I think we'll find out. We'll find out pretty soon. But IWM, nice little recovery right here, 1.58%. We got 40 seconds until the market opens. All eyes on really the S&P. That's what I think we start off with. We look at the S&P up 1.24%. I am really curious if they can hold their gains, if they can expand from these levels. I think some beat up stocks maybe potentially recover now that the Japan news is in and the market really starts to consolidate and have faith that Japan's not going to raise their rates. And then we'll take a look at companies like Shopify, that's up 20%, Palantir's up 1.84%. We'll see how they perform as the global capital equity markets open and as people begin buying and selling. Once again, Upstart had a horrible quarter and they're up 20%. So that's Upstart's like just getting ready for the rate cuts. We'll see how Upstart does as well as the market opens. All right, here we go. 9:30, August 7th. Thank you everybody for being here. The stock market is once again open. Wake your ass up. Here we go. S&P at 528, up 1.16%. S&P right here at 528. We have a little bit of a red candle there on the S&P. So you got just a little bit of a red candle forming as it starts to go down, but still not bad. IWM, another red candle right there, down up 1.3%, but down from the pre-markets. SMCI down 15%. SMCI is getting schmacked. Down 15%. Let's see if there's any bid that steps in and buys the dip on that. Palantir, $27. Makes sense. Robin at $17.39. They're up 1%, down a little bit from the pre-markets, but they're up on the day. Palantir, $27.10. Wendys is up 0.48%. Shopify, 18%. We'll go through their numbers in a second. A little bit of a red candle from the pre-market, but they are still green. The red candle looks like it's turning green as well. Intel is up 2.3%. So Japan was really good for Intel. Airbnb, yeah, I'm sorry for the Airbnb shareholders because I don't think Airbnb deserves down 14%, dude. I really don't. But I have always thought Airbnb was a VC stock. It was something for Y Combinator and venture capitalists to gain a ton of liquidity on by using the public markets. They've performed very well in the public markets. It's just not been a stock that Wall Street is excited for. I mean, like, you would think Airbnb, a household name, would get a premium, and they do have somewhat of a premium, but every earnings they just like fall back into this $100 range. They did miss on EPS, and that's why they fell. Robinhood right here, 1750, but Airbnb not doing the best. They had 125 million stays. I stayed at Airbnb 2 months ago. So, I mean, I do think it's a brand people love to use, although some people don't like the fees and the cleaning and, the lack of, the Airbnb I stayed at, they didn't have an ACE air conditioner. So that was a big surprise to me. I was like, oh, wow, it's really hot in here. But outside of that, we'll see how Airbnb does. They're down 14% on the day. IWM is up 1.3%. S&P accelerating again, 1.28. Oh, look at that. 529. Let's see if we can break 530. 530 on the S&P. 530 on the S&P. That's what we need. Palantir 27.38 on Palantir. Wendys is putting some pep in its step for Palantir. 27.33 up 2.78%. Again, up 15% from that earnings after we fell like 20% off the NASDAQ collapse. The NASDAQ right now, QQQ up 2%, 447. Great for the NASDAQ. Lyft. Again, Lyft, I see more opportunity than I see pain in Lyft, down 15%. Gonna do some due diligence on Lyft, and I'll get back to you guys on that. It's gonna be a hard buy because there's a lot of fundamental problems with Lyft, but I'm gonna try to see if the stock is like too cheap to ignore, if there's a double inside of Lyft. If you look at it's just 5-year chart, it's been horrendous. I mean, it went public when I was in college in 2019. Thing was at $70 when $88 when they went public. Now it's at $9. Got slow at $7.85. So we'll see if there's anything there in Lyft, but Lyft is down 16%. AMD up 2.78%. Upstart, this one makes no sense to me. I have no idea why Upstart is up 27. I have zero idea. Outside of the rate cut, Upstart had a disgusting quarter. They lost more money than they lost last year by the tune of 25 million. So they lost like 25 million last year. They lost 50 million this time. They decreased revenue by 6%. I talked to a guy who used to work at Upstart. He quit like 2 years ago, and he said it was a shit show, dude. It was like he left and he was like, this is the dumbest, like, is AI based insurance. I mean, it's not a stupid company. It's just the execution has not been amazing, and they need rate cuts. They need rate cuts badly. So the fact that they're up 27%, maybe that's a rate cut story, but I have no fundamental reason for why they're up. Meta at 504, they're up 2%. The short VIX ETF that Chris talked about yesterday, that's up 7%. SVXY, because the VIX is collapsing. So that's really good. Carnival Cruise up 1%. Amazon up 2%. Tesla up 1.2%. SoFi, a little bit of momentum on SoFi. We need to get back to $7 on SoFi. Hims, I don't know why Hims is down either. I thought Hims had a great earnings, but Hims continues to sell off after earnings. Celsius is getting some momentum, but they sold off after earnings as well, up 3%. Google's up 1%. Microsoft back to 407. They were at 385. S&P at 528. Palantir 2720. Robinhood 1754 on the day. If SoFi had the quarter Upstart had, it would be down 30%. Exactly. If SoFi had the quarter Upstart had, it would be down 30%. So it's really weird on SoFi. Okay, Shopify. Let's talk about Shopify. So Shopify's up 23%. Congrats to those that bought at 52. You deserve it. My hesitation on Shopify was the consumer, and I don't think that was a crazy hesitation, but this is why if you understand the company, you're able to get through the bear case, right? You're able to say, well, the consumer's not that big of a deal because Shopify uniquely has XYZ. And that's why the Shopify bulls who bought the dip, who really understood the company, you're up 20%. You're up 20%, which is what happens when you know the company. So revenue growth up 20% year over year. Amazing. That beat by 1%. Gross margins 51.4%. That's up 1% year over year. Net margin 16.9%. That's up 6.4%. Subscription revenue 563 million. Merchant solutions 1.4 billion. GMV is up 22% year over year. GPV is up 29% year over year. Monthly recurring revenue, 169 billion on the actual sales that they conduct, not revenue for Shopify, but revenue for all their sellers, up 21% year over year. All of these are very healthy. All of these make a lot of sense in the context of the consumer continuing to shop online, taking market share from a lot of the other third-party players like Wix and Squarespace that, quite frankly, they don't have a chance. Etsy had a crappy earnings. Why did Etsy have a crappy earnings? Because people are buying on Shopify. Why? Because the small businesses are putting their website on Shopify, not on Etsy. Etsy is not growing 20% year over year. Etsy is barely growing 2% year over year. Shopify is the clear winner here. It is the clear winner, even if it is, by all conventional metrics, a bit expensive at 11 times price to sales. So up 22%, amazing for Shopify. It does give me some calm that the consumer is able to buy. They're not buying. I mean, they're obviously buying on Amazon, but Amazon said consumers weakening. Shopify, I didn't read their full earnings call yet, but they have not said in any headline statements that consumers weakening. Disney said that again for their parks division this morning. So maybe people are able to buy stuff online and it's not that big of a deal in the context of at least that segmentation of the consumer. Airbnb down 14%. Palantir up 3.7%, folks. So we got Palantir at 27.58. I think 29 is not crazy after those earnings. I think 29 is actually very reasonable to get after those earnings. So let's see if it can get there, but up 3.5% on the day. I think this is more Japan than Wendy's, but I definitely think people saw the Wendy's partnership and they're like, screw it, I don't have enough Palantir. And they bought some Palantir. Crowdstrike is also recovering nicely. Crowdstrike right here up 3.5%, now at 240. So if you got the 212 dip on Crowdstrike, or I think it was at one, was Crowdstrike below 100 or 200? Yeah, it went to 192. Look at that. Dude, I was looking at the charts this morning when the VIX spiked to 65, which again has only happened 4 times in the past 20 years. It was obviously a buy the panic, buy the dip, like take advantage of the panic. Whenever the VIX spikes that hard, we know better times are coming because it's almost like how much worse can it get? It's kind of when I did debate in high school and you were affirmative, there was affirmative and negative. One of the arguments that the affirmative would make was it can't get any worse, right? So if you were advocating for a certain policy and the negative would be like, well, if the affirmative passes this policy, then XYZ impact happens. The affirmative will be like, well, if that happens, it doesn't matter. Things can't get any worse. So if I was reading an app about how we need to do XYZ to help the economy, and the negative was like, well, the economy is going to get worse, my argument in the 1AR, the first affirmative rebuttal, will be actually, here's some more data. The economy is as bad as it is. It can't get that much worse. So their impacts are non-unique. When the VIX goes up to 65, yeah, it's hard to imagine it gets that much worse, especially when there's not a global pandemic or it's not the great financial crisis. And so if that's the case, equities, they don't have to bottom, but they definitely get cheap. And Palantir at 21, Robinhood below 14, CrowdStrike at 192, they got really cheap. There was a spike right there on Monday at 8:30. And now, as you can see, it has fallen down to 23, down more than 50% over the past 5 days. I bought the dip on CrowdStrike. I still love the company. Makes sense. I do think their Q2 guidance is going to take a hit and that could hurt the company. But overall, look, I think if you go long cybersecurity, DCing on CrowdStrike is not a crazy idea. But I think there could be a decent entry if their Q2 guidance really shits the bed, which I personally think it will. Maybe it doesn't. Also, I think the market's getting excited because maybe it won't, because CrowdStrike's fighting with Delta. They're like, actually, it's your fault. And so is Microsoft saying the same. Microsoft saying actually Delta resisted help from us when we offered it on the day of the Y2K freakout. So Microsoft and CrowdStrike are blaming Delta. They're pointing the fingers. They're like, actually, Delta's just a shitty company. It's not our fault. And if they succeed, they might Delta might or CrowdStrike might be able to get away with it. Palantir officially up 4%, 27.70. It looks like it's going to try to make a run to $28. Let me look at the order flow on Palantir, see if there's any resistance there. Let's see. Palantir 27.70. We have a wall at $28, but the wall is only, it's only 19,000 shares. If we get enough volume, we'll probably break through 28. We have to get enough volume, but 28 is not going to be that hard to get through. We just need some more volume. That's what we have going on. So we had Shopify this morning. Let me see what else we had. Amid Alex Karp just DM'd me. He said he loves mayo. I need to ask Karp that question one day. Like, yo, are you a mayo guy? Because Ted Marbury, the guy who was quoted in the Palantir PR today, he replied to me, the global head of commercial. He replied to me 2 weeks ago, and he literally said, I would quit Palantir to focus on defeating Big Mayo and banning it from the industry, but Karp hasn't been annoyed with me enough yet. So, I mean, the Palantir folks, they don't like mayo either. And if Karp doesn't like mayo, that would make everything amazing. He prefers honey mustard. Dude, honey mustard still has some mayo in it, right? That's the problem. There's still a hint of mayo. That's the issue. If you've got mayo, I can scent it. I can smell it, and it's a no-go. Okay, what else do we have today? We had CVS. Let's look at CVS. Am I sharing the screen? Let's look at CVS. Yes. Okay, so Palantir 27.48. CVS had earnings. They are down 2.5. CVS on earnings. They beat on EPS, missed on revenue. It's a slight miss, very slight miss. EPS is important because their margins aren't the best. So they beat 5.78%, $91 billion in revenue, missed by 0.3%. 183 versus 173 beat. The New York Times had earnings today. NYT. A lot of people forget New York Times and Fox News, they're public companies. New York Times is up 6%. They beat on EPS. They slightly missed on revenue. Then we had Disney. Oh, Novo Nordisk, NVO, this bad boy, they're down 6%. So they missed on EPS 5.8%, and they missed on revenue by 1.49%. So Novo Nordisk is down. I think they were up a lot for the year, though. So still had a good year for Novo Nordisk. Those are the main earnings. And then after the bell, we have Robinhood, obviously, Duolingo, Zillow Group, Monster Energy, Warner Brothers. Those are the main ones after the bell. I think those are, yeah, that's pretty much it after the bell. Oh, and Beyond Meat, if we care about that one. Do you guys remember when I told you that story when I was on a date with a girl and she was like, I'm trying to get into ESG investing. And I was like, oh, you should think of Tesla because like Tesla, ESG, EV, environment. She was like, no, but I hate Elon. And I was like, okay, so what stock do you think is more ESG friendly? She was like, oh, well, I love Beyond Meat. And I was just like, all right. I hope that I wonder how much you love Beyond Meat when you see it down 90% and how much you hate Elon Musk. Dude, everyone, they stop hating they are ideologically against when they lose money. I mean, you could hate Elon, put some money in Beyond Meat, see that go down 90%, see Tesla go up 150%. You start really loving Elon at that point. You start loving Elon, dude. Especially when you lose real money, dude. I'm going to put $100,000 into Beyond Meat. Oh, it's $10,000 now? Huh. Well, ESG, it's like, no, dude, everyone becomes a capitalist at that point. No one wants to lose 90% of their money. Then you realize, oh, we have to actually care about good companies and not just hate the CEO because they like free speech or whatever reason they hate them for. I'm not saying there's not a legitimate critique of Elon. 100% by the way, Elon's interviewing Trump next Monday. So that's going to be insanity, dude. That's going to be on Twitter Spaces Live. That's going to be absolutely insane. But Elon and Trump are going to be talking on an interview. There's plenty of critiques on Elon, but I think she called him racist or something, dude. Like she just said, she just didn't like him. And I was like, all right, well, I don't know if you're going to like Beyond Meat that much better. Amit, what are your thoughts on Hood's price if they only hit expectations? I don't know, dude. Now that Hood got re-rated by the market, I have no idea. I think Robinhood jumps to 22 after earnings. I'll go out on a limb and I say, I think we jump to 22 and either I'm right or wrong. If the market doesn't like it, I don't think there's that much downside. We fall back to 16. That's a stupid buy the dip. So like, I think the risk to reward, if we were at 22 and we missed expectations or just hit, we could fall to 17. If we're at 17, we're not falling to $12. Like that's just like, so maybe we go to like 15 max pain, but I think we probably hit 22 most likely instead. So we'll see. We'll see what happens. Maybe I'm wrong. Let's listen to the Lyft CEO. I thought this was a good interview. Here's his argument on why Lyft is doing well and also why the consumer is in a good state.
This morning about Lyft reporting its second quarter results. Just did that earlier this hour. And join us right now on the set in person, no less, with those numbers is Lyft CEO David Richard. It's great to see you here, sir.
It's great to be here.
So let's talk about these numbers because you blew out and beat expectations across the board.
Yeah.
At the same time, we were talking about guidance for the future, a little bit lower than had been anticipated. And the stock actually is under some pressure this morning as a result of that, I'm afraid to say.
Yeah.
And so I think we just want to understand, A, what just happened, but also B, to the extent that you're a barometer or a signal of where you think the consumer's headed in this country, you know,
what's going to happen?
Is there more challenges to come? Exactly.
By the way, put in the chat if you use Uber or Lyft more. Let's see how many people use Uber or Lyft more.
Exactly.
So what just happened? So what just happened is we had our first profitable quarter ever in the company's history. And that is a big deal. And I'm going to look right at the camera here and say thank you to the team because the team worked incredibly hard over many years, but obviously over the quarter to make that happen. Record rides, record riders, revenue up 40% year on year, profitable quarter, and free cash flow for the third quarter. So all those things are good. And by the way, faster pickup times, best pricing we've ever had. So literally every service level looking good. Look, when we look to the future, I remember I was just telling you this. Jamie Dimon gave me some advice when I took the job. And he said, just be careful about predicting what you can't predict, what you can't know and can't control. And what we can control is great pricing, great ETAs, great everything else. But we also want to make sure we deliver. And we're just super focused on that long term.
So what is that? Are you trying to say that the guidance is you're hoping to just sort of set a floor and beat the guidance?
I mean, look, every CEO probably sort of wants to beat the guidance. I don't want to make a prediction different from what we've already said, but I can just say that our goal is always to do what we say we're going to do.
What do you see happening in this economy? Because we're all having debates every day now. The market's down.
This is the most important part. This is where we got to see how a consumer-led company CEO is really thinking about the consumer.
Yeah.
There's questions about what the Fed is going to do. There's questions about growth in the country,
Right.
the consumer. Are you seeing anything? And,
Really
and
not.
we talked to your competitor yesterday. He said he's seeing nothing.
Yeah.
And so we're all sitting around going, if these guys are seeing nothing,
Right.
what are we talking about here?
You know, look, here's what I see. I see, 2 million people a day taking rides to get out to, the airport, to go to work, to go to school, to go to whatever. Lyft is a really important part of a lot of people's lives every day. Millions and millions of people's riders and drivers' lives. And we don't see anything to worry about. We just don't.
How much of the business right now is the consumer on their own versus B2B business travel?
Vast majority is consumer.
Vast majority is consumer.
Yeah.
Is that
Vast majority is consumer. Lyft CEO sees no issue. So when McDonald's and Nike say consumer is a problem, again, I still think the jury's out on this, but there's a couple scenarios. Either the CEOs are using this consumer weakening thing to get out of crappy results, which, they were doing that during the Ukraine invasion, all that stuff, or legit the consumer struggling, and maybe it's just not struggling for DoorDash, Lyft, and Uber, but it's struggling for everything else. I still think the jury's out, but if the market figures out it's one way to the other, they're going to move in that direction. And so I think the market's really trying to figure that out right now.
that something you hope to change over time? And I think Uber has taken more business.
Yeah. They've gone a little bit more with business. We were probably a little bit stronger on the consumer side relative to them, but on the other, I don't know, relative to them, I'm not really sure about those guys. What I can tell you is we've got some segments like healthcare, like some B2B commute and some other things that are business focused. But largely, we really, we love all of our riders, and we really love the consumer side.
Where do you have pricing power? We were talking about price competition.
Sure.
In some cities, it's been a race to the bottom, which is not good.
Right.
That race seems to be over for the most part. But I think there's still a healthy competition taking place.
So there's healthy competition. I'll tell you where we're really interested right now. We are sort of open up a can. What am I saying? We're opening up in a can of whoop ass on surge pricing. That's the thing we're really focused on.
That's what I'm talking about, bro. That's what I am talking about. This is what you want to see. I have no position in Lyft, so I have no bias towards him saying a can of whoop ass for like the stock to go up because I don't own any of it. But that's what I want to see. We are opening up a can of whoop ass on surge pricing. This is what a CEO does, dude. This is how you talk on live TV. And honestly, that's what got me excited to look at Lyft further. Like that one slide, I was like, let's look at the fucking financials, dude. I like this CEO. Let's see what he's saying.
When was the last time somebody said they opened up a can of whoop ass on our air?
Totally support your saying that.
Do you appreciate that? Thank you so much. I thought about it a little bit, and I decided I think I can go for it.
Whoop ass is good.
Whoop ass is good. And we are opening up a can of whoop ass.
Not great ways to say it other than saying whoop ass, if that's what you want to say.
And honestly,
it's so funny. FTC Airways will let you say ass. But if you say the F word, the S word, if you say anything else, you're done for. But you can say ass. You can get away with that on live TV. You can't say anything else.
I looked it up. I used ChatGPT. It said, nope, you've come up with the best way to say it. But the thing is, it turns out riders really don't like it. They don't like the variability. And we've seen prime time, that's what we call it inside, surge pricing, go down 25% Q on Q. And that's part of the reason why we're getting great growth. So we actually have a new feature. It's called Price Lock. And it allows people who commute to basically lock in a price for the same route every single day for a couple of bucks. It's going to be a great feature. So we're really.
So look, I mean, the reason I shared that is less because I care about Lyft, more so because everyone needs to care. The S word is shit. The S word is shit. The reason I care about what he has to say in the context of the consumer, and he says the consumer is fine. Get Lyft down 16%. And if he says it's fine, Uber says it's fine. Some people are in the chat. So what do you guys think? Chris and Nate are saying Lyft and Uber users are upper to middle class. Is that true? I feel like everyone uses Lyft. Am I wrong on that? Or Uber? I feel like everyone has to travel. And I know there's a segment that can only afford the bus, but I do think even if you're not middle class, people still use Lyfts and Ubers. Maybe I'm wrong there. Maybe it's totally middle class and that's not a good read on the consumer. Because if that's the case, then we still have to get more data in the context of the consumer. But I do feel like a lot of people use Uber. Yes, it's true. Yes, it's true. Okay, so a couple of people say everyone uses them. Majority of you say that it's middle class. If it is middle class, then maybe their consumer read is not as important. But it at least goes to show some segments of the consumer are not struggling as much. Wow, S&P 530. S&P 530, Robin at 1742, Palantir 2734, S&P is at 530, IWM at 207, Rivian's down 3%, NVIDIA 108, look at that, NVIDIA was at 92. Again, the dip was so quick on some of these names, it was so quick. I mean, you just have to put in an order and hope it got filled. but it was really quick to get some of these names. But there you go. You're up. NVIDIA at 107. Caterpillar's up another 2%. Carnival Cruise up 1.64. Amazon 165. Let's go to the Mag 7. Google 163. They're recovering from that antitrust thing. Meta's at 507. Meta was at 450 a couple days ago, 508. Microsoft 408. Apple recovering as well. Look at that. Apple fell 5% after Buffett sold 50%. Apple's back. Tesla is struggling today. Tesla's the only one out of the Max 7 that's down, but everything else is doing okay. Elf Beauty as well, up 1.24% on the day. Crypto stocks are doing okay. Bitcoin at 56,000, CleanSpark at 1230, Coinbase 194, Bitfarms at $2, and Marathon at 1731. All of them still down for the week, but a little bit green today. Chris is right. Alternative to not use Uber or Lyft is buying a car. There are plenty of alternative Starbucks or Nike shoes. The bottom consumers are trading down to save. Yeah, that's fair. That is very fair. I mean, I do know a bunch of people that just don't buy cars. They just like Uber and Lyft everywhere because it's cheaper for them. Some of them also just like are afraid of learning how to drive, which I understand, dude. I didn't get my license till I was 21. And I could use the easy excuse and say I was busy during high school, because I really was. I was traveling every weekend, and like I missed my driving exam because I was in California for a debate tournament. And then I just got lazy in college. But honestly, I was a little bit scared to learn how to drive. Like I was like I would get in the car with people, and sometimes I was just like, imagine, like it was just anxiety that I had. I don't know why. But then I just started driving. I passed my test immediately. PayPal right here up 2.45%. And then 1 month after I get my license, I get a client while in my senior year of college, and I have to drive 120 miles every single day, 4 days a week. So imagine going from not knowing how to drive to 1 month later driving up 287 North in New Jersey, 60 miles back and forth. Like I got accustomed to driving really quickly. I was driving with these big ass trucks at 10 p.m. every night, just riding along. That's where I started liking podcasts more, because you really have nothing to listen to at that point. So you got to turn on something. But in general, people that don't know how to drive or don't like driving, Uber and Lyft obviously is the option. And you can even get subscriptions to Uber and Lyft, which make it a little bit cheaper as well. NVDL, the 2X NVIDIA fund, that one is up 7% on the day. TSLL should be down. Leverage Tesla, that's up slightly. Now that Tesla just went green. And then CrowdStrike, wow, CrowdStrike 241. Look at Shopify, 22%, bro. Goodness. IWM as well, 1.49%. And NVIDIA right here, back at 107. Back at 107. NJ roads suck worse than NY. The good thing about my drive, it was like 60 miles straight on a highway. So it wasn't too much of the residential areas. It was just like straight highway. And so didn't have to worry too much. Fortinet, let me give a shout out to Steve. Fortinet, this has been his big cybersecurity play. He's been talking about this one for a few months now, up 24%. Look at that. Look at that. I mean, that's probably why CrowdStrike is doing well, is just the cybersecurity demand in general is increasing. Fortinet, they crushed earnings, increased EPS guidance. There you go. Up 23%. Not bad at all. Shout out to Steve. That was one that he's been talking about for a while. So Fortinet is up. We got a Robinhood red candle. What do we have in Robinhood? Robinhood 1726. Yeah, let's see, dude. Let's see. I think the street, they got to 1790 in the pre-markets. I think the street wants to see earnings at this point. If it goes to 15 or 16, I just think that's a stupid dip. There's no fundamental reason. I don't think they're going to miss on any of the metrics. They never give guidance, but they'll give July metrics. And if July metrics are good, I think that'll do well. The big thing about Hood, though, is they kind of need the S&P to recover. Like, I think they're going to do well independently, but they need the markets to do well. Again, it's a bull call on the market. So if you believe Japan is priced in, even if they stay flat today, like they go down 1%, but the earnings are good, I think that just coils it up even further. And eventually the spring uncoils as we cut rates and as the S&P starts to get back to previous levels, because it becomes a bull call on the market. So, and because the street, realizes, okay, these numbers are actually really good, and revenues will only continue to accelerate as the market goes up. So we'll see what happens after earnings, but I think that could be the way it shakes out. Palantir just falling below 27 now. So Palantir had a lot of resistance at 27.72, got hit, now back below 27. Again, if you're just joining, we got a Wendys deal with Palantir. It is my tweet on my profile. I'm going to put it in the chat for those that want to read the whole tweet. But really big deal, powering 6,000 stores globally. Just an awesome partnership, and good deal for Palantir today. Rapid7 did great on earnings too for cybersecurity. Yeah, let's see if CrowdStrike has such a good earnings that they're able to overcome the guidance lowering, because I think they're going to lower guidance. And if they can do that, dude, if CrowdStrike can have such a phenomenal earnings that the street overlooks them lowering guidance for Q3 or for full fiscal year 2025, then it's just an elite company. And so we'll see how the street prices it. But in general, going along cybersecurity, I just don't think it's a losing idea thematically over the next decade. Okay, let me read some price target upgrades and downgrades across the street. So RBC, they lowered their price target on Airbnb to 120. They said Airbnb's print was tough. While the company still maintains industry-leading margins with a possibly longer-term product cycle story, we believe the company is facing a textbook multiple compression driven by higher marketing spending into lower demand. So Airbnb got hit. Bank of America lowered SMCI from 1,090 to 700 on the margins issue. And then I think we got another downgrade on SMCI to 600. Piper Sandler lowered the price target on Celsius to 65 from 90. So we saw that. Rivian lowered the price target from 18 to 20, from 20 to 18 by Needham. And then Airbnb also got lowered to 135 from 167 by Citibank, while they also raised the price target on Uber from 96 to 98. So SMCI got a big downgrade by Bank of America. Airbnb got a couple downgrades. And then Celsius also got a downgrade as well. Celsius, it's crazy, dude. Celsius was like a darling stock back in February, and the growth just not collapsed. It just didn't live up to the hype or the expectations. And then this thing goes from 90 to 42. So Celsius was a really good trade, but it got hit now over the past couple months. General Cody, thank you for the super chat. Tanium, a cybersecurity company, is likely going public in the next few years. Would be great to get your thoughts on the industry. Yeah, and I'm still doing more DD on cybersecurity in general. CrowdStrike really got me into the journey of learning about cybersecurity after they collapsed. But Wiz, Tanium, I mean, if Google's willing to pay $23 billion for Wiz, and Wiz then says, nah, we'll see you later, we're gonna go public. I mean, dude, it's like, even if you're paying a little bit of a premium for these cybersecurity names, if these startups think they can compete with the CrowdStrikes and Palo Altos of the world because they see that much demand for that many players to compete, and obviously anecdotally, the industry is not going to get less important given all the stuff we have going on geopolitically. So yeah, I think it makes sense. I think it makes sense to at least go long the industry. NVIDIA 105, Palantir 2717 back above 2017, AMD 134. We did some TA on AMD yesterday on the market close. Not looking the best from a technical perspective, but we'll see if it can hold that 130 level. If not, 118 is where it has a chance to go if it breaks some of these levels. But AMD recovering a little bit. And then Tesla right here at 199. Tesla is red on the day. My kids love Roblox. What's the case for the company out 10 years? Are they still a game platform or pivot into something more like NVIDIA did, gaming chip business to AI chips? Honestly, dude, I don't know. Roblox has always confused me. You would think Roblox is a stock that's like welcomed by everyone and excited because like they have so many users and they're building like this pseudo social network on top of gaming, which is more interactive and all this stuff. But they're not profitable. They're a bit expensive at 7 times price of sales. And I think a lot of people question the disposable income of kids. Now, obviously their parents are giving them the money to pay for all this stuff, but still it's not as attractive as a monetizable user base as something like a Facebook. And I only bring up Facebook because Roblox tries to compare themselves as a social network. So that's where I get the comparison, but I don't know. I think Roblox 10 years from now is obviously much bigger. I don't know if it's the best opportunity to capitalize on gaming. Or on the quote unquote metaverse, if that ends up becoming a thing. Let's hear from Reddit. Reddit has earnings. Reddit actually fell a little bit. So Reddit is down 4.6%. I actually really like the valuation on Reddit. Hear from their CEO and why he thinks Reddit is doing well. And then we'll keep going from there.
Shares are under pressure right now in overtime, despite beating Wall Street estimates on the top and bottom lines and on daily active users. Joining us now in an exclusive interview is Reddit co-founder and CEO Steve Huffman with our Julia Borston. Julia.
Thanks, John. And thanks, Steve, so much for joining us. We really appreciate it. The stock.
Guys, should I go blonde? Would that be crazy if I show up with blonde hair? Would that be crazy? I don't think that would be crazy, right? Look at that guy's blonde hair. I don't think this would be crazy to have blonde hair. I know it's probably better as black, but what do you guys think? I feel like we got to try it at least once in life.
Stock is down right now, nearly 5% in after-hours trading, despite beating on pretty much every single metric. It seems like the stock's under pressure because despite your fast growth, both in terms of revenue and in terms of users, average revenue per user grew just 2%. And in the US, average revenue per user actually declined by 5%. How do you address the concerns that raises about the long-term potential for the company?
Hi, Julia. Thanks for having me. Look, I think we had a really strong quarter. We were up over 50% on users, 50% on revenue, $39 million adjusted EBITDA. So we're getting closer and closer to that GAAP profitability milestone. Look, long story short, I think we're really proud of the progress we've made growing this business.
You know, the one thing I can't stand CEOs who speak so slow, dude. They speak it's hard to trust a CEO that speaks this slow, dude. Like you got to be in a hurry, dude. You got to get the stock up in a hurry. You got to speak in a hurry. You got to get through this interview, go do other shit. He's taking like 35 seconds between every word. We got to pick up the pace. That's why I like the Lyft CEO. He was talking fast and got the job done.
Business. Our work is working. And I think we're finding that users truly crave what Reddit, the content that we have on Reddit, and increasingly growing our customer base and more happy customers. So, I can't always explain the short term, but over the long term, our work is working. Our product is, I think, got a great fit in the market, and we love the way things look going forward.
So really digging into those average revenue per user numbers, is there something going on?
Okay, Elon does speak slow, but when he speaks, you listen because he's freaking Elon. Right? But this guy's Reddit, big company, awesome stuff, but it's not Elon. So he can't afford to speak this slow.
On here in the US in terms of the ad market that you think impacted the quarter, or is it the fact that you're showing fewer ads or something like that? Help us understand the discrepancy here and the fact that you actually saw a decline in ARPU in the US.
Okay, this is important because he's going to speak on advertising in general for the consumer. So this also matters for the broader industry.
The biggest driver there is we're actually just growing users quite significantly in the United States. It was, I think we grew almost 70% in the US last quarter. And so, average revenue per user, when users grow, that's the bottom half of that formula. So look, I think the top line numbers speak for themselves. Growing users significantly year over year, revenue significantly year over year. And so sometimes, users outpace revenue a little bit, and sometimes revenue outpaces users. But we'll take the strong user growth and strong revenue growth, any quarter.
Steve, it's John. Thanks for joining us. To what degree are you going to make the higher end, more premium pitch to advertisers? And how much is the granularity of data that you have on user interests going to aid that?
So we actually believe that Reddit is a fit for customers large and small. Every company's customers are on Reddit somewhere because Reddit has communities for whatever you're into, whatever you're thinking about watching, wearing, doing, going, whatever you're going through. And so as a result of the vast coverage of our content, pretty much every company's customers are Reddit users somewhere. And so I think this makes Reddit a natural fit for both like the big brand advertisers, but
okay, a bit of a hard listen, but you guys get the point. The really important argument he was making is that not only is Reddit growing users, but they're able to do brand awareness and performance advertising. Now, why does this matter? Elon's Twitter, Elon's X, they just filed a lawsuit. I don't know if you guys are keeping up with the story, but they just filed a lawsuit. I think this happened early yesterday, where Elon is suing. Let me just share the video. Elon is suing a ton of companies that boycotted advertising on Twitter. And they boycotted advertising on Twitter because they feel that Twitter has issues, right? But Elon and Linda, the CEO, they think it's actually a deeper issue. They think that there's, stuff around free speech. So I'll share the video in a bit, but this matters because in advertising, we've got to make sure advertisers are healthy. We got to make sure they're spending. We know Google and Facebook, they're spending. Reddit is a new channel that they're spending on. AI monetization and how they're going to fuel ChatGPT's engine is going to be very important for Reddit in terms of the use case for their data. But also advertisers are coming to Reddit because they actually see the ability to target more effectively, which means advertisers are not only seeing more healthy growth from Reddit, but they're willing to spend money in different channels. They're not spending on Twitter right now, and they're kind of boycotting Twitter because of a lot of different stuff going on there, but they are at least spending on Reddit. So Reddit down 5%. I think at 8.4 billion market cap, 9 times price to sales. Now, I think 2-3 quarters in a row at profitability. I don't hate it at this price. I think they re-accelerate user growth even further next quarter. That continues to help them, and that takes away market share from people like Elon when it comes to Twitter, because if advertisers are not going there, they're going to go to other places that have real-time data, which obviously be one of the companies like Reddit. Didn't Elon tell advertisers to go to hell? Yes, he did. So here's what Linda shared yesterday on X, and here's her message to the users around the advertising slowdown on Twitter.
Hey, everybody. I was shocked by the evidence uncovered by the House Judiciary Committee that a group of companies organized a systematic illegal boycott against X. It is just wrong, and that is why we are taking action. Today, we filed an antitrust lawsuit against the Global Alliance for Responsible Media, 4 of its key members, and the World Federation of Advertisers. These organizations targeted our company and you, our users. The evidence and facts are on our side. They conspired to boycott X, which threatens our ability to thrive in the future.
Okay, so that's the whole point. I'll send the full video in the chat if you guys are curious. She does talk slow. I'm not gonna lie. That's a red flag, dude. The volume was totally up. It was on her video. I put the volume to the max. She is talking slow. But here's my question, you guys, based on that. Does she have a point? Is if Elon tells the advertisers to GFY, does she have a point around how advertisers are systematically boycotting X? Is that a thing? Or is it no, if you told advertisers to go F themselves, they have no, like, they don't have an obligation to advertise on Twitter, which is why I brought up Reddit as well. One of the reasons you might be seeing Reddit get some advertising momentum is because people are leaving Twitter. Again, Twitter and Reddit are the worst advertising channels in social media compared to Google and Facebook. Google and Facebook are cream of the crop. And then I guess Pinterest would be third. Pinterest is okay. Especially for, the 40-year-old women demographic. But then you have Twitter and Reddit. So if Twitter's not getting any of that money, it's going to go to Reddit, which is why Reddit just beat on their advertising numbers, because they're like, hey, we're getting a ton of demand. Why are you getting a ton of demand? Because maybe people aren't going on Twitter anymore. And if they don't want to use Meta or Google, then Reddit's the only one left. So that is where I think Reddit is thriving. But it begs the question, do you think Elon's going to win this lawsuit against them? Dude, as soon as I saw this video, I was like, I don't know what she's talking about, dude. I don't know how it's illegal to not advertise on a website. Robinhood right here, 1710. Robinhood getting a little bit of a red candle right here. S&P at 530. So I have to read the lawsuit. I haven't read it, but I was like, how is it illegal to not advertise on a platform? Like if I was a company, I would just have my lawyers be like, no, just say the advertising sucks. Like just say like, we're not going to advertise because like we don't have an obligation to spend money on Twitter. So I don't know. I think there's there probably is a systematic boycott that the advertisers plan. There probably is conspiratorial. I don't know if that means Twitter gets to sue them and file an antitrust law case. Like it's a bit weird for them to say that. It's the colluding that's illegal. Okay, so sure, I'll give you that. It's the colluding that's illegal, but I mean, do we not think the colluding happens all the time in advertising? I mean, literally. CNBC getting all these farmers. I mean, I tried, I tend to turn off CNBC when the commercials start because I can't stand it, but every other commercial is a pharmaceutical commercial. And then on CNBC, a bit friendly when you're talking about the pharma companies. Why? Because obviously they're advertising. So I feel like there's so much collusion in advertising that to actually bring this case to the point where you win, I don't know, dude. It seems like a tough case to win. It definitely is collusion. I agree with that. It's definitely collusion. I don't know if they're able to win that argument. Someone said, my political alignment shows because I'm afraid to call it X. Oh, that's hilarious, dude. Dude, I don't call it X because X is a stupid name. That's why I don't call it X. That's a first. I just got called a liberal because I don't call Twitter X. Dude, you know how much I use X? I'm on that shit all day. I spend 8 hours a day. If you look at my analytics, there's no political alignment here because I call X Twitter. But it's just hard to remember to call it X. Twitter is a much easier name. No, it's not about that. It's more so just a question of, do you think they can win this lawsuit? I don't know, dude. I don't know if they can do that. QQQ 448 up 2%. And again, I'm an Elon fan. I like Elon. I love Twitter. I love X, whatever. Like I literally, like, I'm so happy Elon bought it. I'm happy he bought it because he opened up free speech. Now you got a lot of 4chan stuff going on Twitter, but I still think free speech wins. And he's paying creators. He's actually, dude, I got paid $1,200 last month off Twitter. Like, that's, $1,200 is not like, is obviously not as much as YouTube. It's not as much as like other media platforms, but $1,200, I mean, for 15 years, people got paid nothing off Twitter. So it's like they're trying to develop a way for you to make somewhat of a living off Twitter. And you got to work really hard to even make that $1,200. Dude, the monetization is bad. Like you can put up a lot of results and get paid like dollars, like not even tens of dollars. It's like not good monetization, but they're trying. So I'm a fan of Elon buying Twitter. I just don't know if they're going to win this advertising lawsuit. But we'll see. We'll see. Are you bullish on Tesla Optimus? Yes. I am also bullish on Figure, which is the startup I invested in. You guys want to see what he tweeted yesterday? Dude, Brett Adcock. All right, I want to get your thoughts on this. So Brett Adcock, the CEO of Figure, he has some balls, bro. He has some balls. This is, oh, wow. Elon deleted the tweet. Wow. Elon deleted the tweet. Elon deleted the tweet. Oh, my God. So Elon tweeted to Brett Adcock, the CEO of Figure, which is a robotics startup competitor to Optimus, bring it on. He put 3 words, bring it on, in March. Brett Adcock quote tweets him and says, look at me, I am the captain now, which in and of itself, dude, you have to have balls to say this to the CEO of Tesla. I mean, like, whether you think that's narcissistic or not, you have to have some balls. The reason he says that is because they just released the newest version of their Figure robot. The post is unavailable. Elon deleted the tweet. Why did Elon delete the tweet? That's so weird, dude. Why did Elon delete the tweet? I don't think Elon looked bad for that. If anything, Brett looked too cocky. Like that made Elon look better. It made Brett look a little bit like too cocky, not as humble, which I love Brett, but that's my one thing is the dude is a bit like overly cocky in my opinion sometimes. But outside, I mean, maybe you need to be like that, right? If you want to be a generational CEO. But wow, Elon really deleted it. So Elon, see that's weird. I don't know why Elon got rid of that. But the point is, it is hilarious, right? It is absolutely hilarious. It's funny. So yes, I'm bullish Optimus. I'm bullish robotics. The Tesla people last night, dude, it's kind of ridiculous sometimes. I love the Tesla people, but sometimes the cult, I mean, like, they go a little too far. They're just so mad at him. And I'm like, dude, he's just having some fun. Like, yeah, it's a little cocky, but he's just having some fun. He's just playing around, This is what I got tagged in yesterday. I got tagged in this mess yesterday. I'm worried about him mid-investing. He was invited to become an early investor. I just hope that he's not being used. And then someone said, yeah, was he? He's a smart guy, not worried. And I was like, yeah, I'm a proud early investor. I think some folks don't understand Figure and judge based on outside appearance. I could be wrong. Startups are hard. I don't know, dude. I think the Tesla community should embrace competitors. If you want robots to be a thing, you got to embrace a lot of players. Elon's not going to do this by himself. It's very hard to get one product to succeed, especially in this industry. And the TAM is so big, there's going to be so many winners. But I think both are going to do well. So yeah, I'm bullish about robots. How did you invest in Figure? So a friend of the channel, Derek, you guys know him. He got me into that deal directly on the cap table. So super, super grateful for that. I mean, dude, people are like, oh, you could have put the 25,000 into Tesla. Like, dude, I would have had to buy Tesla at like what, 150, 170? I got to buy Figure at a $2 billion market cap. I mean, to double on Figure, which by the way, the private offers that people are putting up for Figure, it looks like it's already 3 to 4x that investment, because like doubling from 2 billion to 4 billion is way easier from 700 billion to 1.4 trillion. So regardless of what happens to the trajectory, I think the investment is going to do very well, because I don't think Figure is going to go bankrupt. Hopefully. Startups are hard, but I think I get a double quicker than I get a double on Tesla. A double on Tesla means 150 to 300. I would have had to buy it at like close to 170, so 380-ish. So I think I made the right investment versus buying Tesla stock, just valuation wise, but we'll see if they end up winning. Palantir daily highs. All right, so we got Palantir moving. Here we go. Palantir S&P is at 530. Palantir 2764. Not bad. 2764 on the day. We got to get to 2785, I think, is the next level to really try to make a run for 28. Is Robinhood dumping before earnings? Where's Robinhood? Are they dumping before earnings? Robinhood 1730. Okay, so they just went green. They went red, then green. I think Robinhood, we might see some action closer to 3 p.m. right before earnings, or maybe it sells off into earnings and then we get earnings. I don't know, dude. I am nervous. I am anxious. Obviously, I have a big position. I think Robinhood is going to do well. I really do not think they deserve to be at this price, and we'll see. But this is the days. This is what it means to be an investor, right? You got a big position. You were up big on the position. Then the fucking Japanese yen carry trade collapses for one day. Your stock goes down 40%. You're still up on the position, not up as much as you were. And now you're hoping that the company executes to like get back to where you were. And it all depends at 4 p.m. what they say. Like there's a thrill to that, dude. There's a real thrill to that. There's also a thrill to losing thousands of dollars, but there's a thrill to potentially making all of it back if the company executes. So we'll fucking see, dude. 4 p.m. It's going to be fun. It's going to be exciting. Did you need a 100K minimum? No, the minimum was 25K. And I had to struggle to get that 25K, dude. I had to find a way to get that 25,000 to put in, but I just didn't want to miss out, dude. It was my first private deal. And it's like I had a feeling that like at 2 billion, I'm going to double at least. I don't think the company goes out of business, especially if you saw some of the documents I saw in the data room and just like how much progress they made. I'm like, yeah, this makes sense. Like, I don't think this is crazy to take this 25,000 and put it somewhere else. Now I'm not going to be liquid on it for a long time, but again, the potential figure is hundreds of billions in net income. And that's why when Elon says optimist to 25 trillion, it's because you're making hundreds of billions in net income. So when you put a multiple on that, you get to the many trillions, which is why there's a lot of people that can win in this space. There's other players as well. I think Figure and Tesla are going to be the ones that are the most ahead. And obviously Figure's got a rockstar CEO. Tesla's got a much more accredited CEO. So I think Elon's going to pull it off, but I think Figure, if they're number 2, then that's still a good return. If you want to get exposure to Figure, you can invest through ARK's ETF. The only problem with ARK's venture fund that's on SoFi is they have a lot of shit in it, like Stripe and Discord, which are good companies, but I don't know the valuations on those. So that's the only problem. But Figure is in a bunch of VC funds that you can get exposure to. It's just kind of shitty exposure stuff on it. Amit, you have to see the coup happening in Bangladesh. So I saw this last night, actually. I saw headlines about this. I didn't read too much into it because I was worried about Japan not crashing the markets and reversing this interest rate thing. I have to do more research on this Bangladesh issue. I know the socialist government is starting to get overthrown a little bit. I found out last night for the first time that they're more socialist than they are capitalist in Bangladesh. But I have to research more into that. Anyone invest in VCs via Hive platform? So Lord Gorbson, I found out about Hive last weekend. Hive is a platform where people can do real-time bidding on private equity. So anyone can sign up to that, and you can literally buy. Like fucking Databricks was selling for $70. OpenAI was selling for $200. Premium valuations if you're buying them in the secondary markets. But if you want to really invest directly into startups, you can via HIIVE. That's the startup that you can get exposure on. Forge Global. Okay, I don't know about that platform, so that's another one. Forge Global. Yeah, Robinhood just turned red. Robinhood turned red. I mean, look, it is also normal for stocks to go a bit red before they have earnings. That tends to happen a lot. If you're saying Amit, is this a buy? Yes, I think it's a buy, and I'm gonna live or die with that after earnings today. I just don't think this valuation makes any sense, and I think they're gonna put up numbers. So we'll see. But I'm gonna watch for the reversal at 3 p.m. Either reverses at 3 p.m. or it further dumps, and then we'll see what happens. The only fear I have is they have a great earnings and they gap up to like $18, which is awesome. $18.50. That's a great result. That would be up 10%. But it's not at $24.50 where it was at 3 weeks ago, less than 3 weeks ago before Japan. So I don't know. We'll see. We'll see what these numbers look like. CleanSpark's getting hammered as well. CleanSpark, this sucker was stuck at 16 for a long time. Now it's below 12. 1198 here. And Bitcoin recovered a bit. It didn't recover fully, but it's the miners are getting slashed, even though Bitcoin went from 49 to 57. I know Bitcoin's still down a lot, but it did have a bit of a recovery here. S&P at 529, Celsius at 42, CrowdStrike 239. Where's Palantir? Palantir 2764. Palantir still up 4% on the day. My average on Hood is like $9-ish, something like that. I think $9, 9 or 10, round about that. Yes, this is not financial advice. This is obviously not financial advice. This is my opinion. I like it. People that ask, hey, is it a buy? Yes. If you were Amit Kukreja, if you lived my life, then then yes, you would think it's a buy. If you live your life, you have a different life. So none of this is obviously financial advice. The stock could go to $10. It could go to $30. I don't know where the stock's going to go, but I like it for a variety of reasons. So that's how I think about it. Okay, let's listen to OpenAI. Let's get some coverage there. So OpenAI co-founder left 2 days ago. He said he was taking a leave of absence to like relax. I don't know how you're running the biggest AI company in the world and it's time to relax. I think there's something deeper there, but let's get some coverage around that.
Starting point is Greg Brockman is important, Rachel. He's going on a leave of absence. Sort of define what we know about that.
Yeah, so we know that he informed the company that he's going to be taking off until the end of the year. He's been at the company from the very beginning. In fact, I've been told by people that the very earliest days of OpenAI were happening at his apartment. So he's definitely been an integral piece of the company. He's one of the top people there, someone that Sam Altman, the CEO, often looks to. So it's going to be interesting to see what happens while he's out.
We're showing a post that he did on X kind of confirming the details of it.
Palantir 2780. We just got through the 2780s. Let's see now if it can make a run into 2790 and then 28s after that. Let's see.
And it looks like he needs a break. Schulman is a name I'm less familiar with. What was he doing at OpenAI? And I guess how significant is it that he's jumping over to Anthropic, of all places?
That, I would say that's a pretty big deal. I mean, we've seen a couple people.
Dude, that's the weird part. They're leaving OpenAI to go to other AI companies. And it just begs the question, why the hell did Apple decide to give Sam Altman 2 billion devices? Like, you don't have co-founders leave the company unless they hate the founder. Like, that just, like, they're not leaving for more money to go to a company where they're not going to be a founder. So it's really weird, dude. It's just a really weird thing for why they keep leaving.
Make that kind of move recently from OpenAI. But yeah, John Schulman, also someone who's been there from the very beginning, with him gone and with Greg on leave.
Hold on, guys. I know I'm being annoying stopping it, but we're at 2795 on Palantir. I know I'm annoying stopping the video, but let's see. 2798. Do we get to 28? I think we break 28. We're right there. We're right there. Oh my God. At 28, the resistance is 50,000 shares. So the resistance just went up. I said it was 18,000 20 minutes ago. Now it's 50,000. Okay, so 28 is actually going to be a little tough. 28 is actually going to be a little tough. We need to call up Derek. 50,000 shares. Get this over with. 2795. You know what I did do on the dip? Although I didn't buy a ton on the dip at 2140, I got rid of a ton of covered calls. Like my sister had a bunch of covered calls at $28 for August 30th. I bought back all of those on her account. And so we were able to protect a ton of her shares, and we bought them back up 82%. So didn't catch the dip because it was quick, but I did get rid of the covered calls. And so now the shares are more freely able to go up without worrying about those, which was a blessing, dude. Getting it to 21 and made the cover calls so cheap to buy back. So that was another thing I think a lot of people could take advantage of. SoFi, where's SoFi? Yeah, we need 50,000 shares, dude. I think we'll get it, dude. 50,000 for Palantir is not crazy anymore. SoFi's up 4% at 670. SoFi doing okay. Robin at 1736. Microsoft 408. S&P at 529. And again, it's healthy to have this recovery rally happen over the next month. It doesn't need to happen all at once. It definitely is not healthy to see the S&P go back to 560 tomorrow. But hopefully it does get back there. It needs some Wendys Frosty. Yes, exactly. That is literally you buying calls. You did buy the dip. Oh, well, that's fair. No, that's fair. Yeah, that is true. If we bought the calls back, we bought the dip. That is correct, Doug. That makes sense. By the way, shout out to Doug. Doug, for if you guys don't know Doug, Doug he's in the chat every day. So you guys should know Doug. He's a big guy in the chat. Douglas Hurstel. He's done very well on Robinhood in the DMs that I've seen. So shout out to him on getting Robinhood very early. But Lumen, this thing is up another 25%. I think he got this thing at $1. They signed $5 billion worth of deals, including a deal with Microsoft yesterday. They're a AI networking company. What does that mean? I really don't know, but it has AI, it has network, and the stock's up like, what is it year to date? The stock's up like 500% or something, 600%. Yeah. So he had some calls on Lumen as well. So shout out to Douglas, man. Some of you guys have some big wins in the community, and you deserve it, dude. You deserve it. When you take the risk when no one's looking, you deserve the gains. So that's what we got there. Palantir 2789. Yeah, that 28 is going to be resistance. All right, so we'll go back to the video. We'll get back here if we get closer to 28.
leave. That means there, to my count, is like 2 people from the original 2015 blog post saying, welcome, this is OpenAI, here are all of our founding members.
Yes.
We have Sam Altman, we have Waj Zaremba. I believe those are the 2 people that are remaining there, in addition to these guys. So it's going to be interesting to see what happens going forward.
So, I mean, the information reported in the first instance that Greg Brockman was leaving, then I think we got some clarification that it's a leave of absence or a sabbatical. But the point being, in aggregate, people track OpenAI. There's been a lot of change. It seems a very long time ago that Sam Altman was briefly ousted. So summarize it all up for the audience. You know, where do they stand now versus that fateful weekend of November 23?
Yeah. No, it seems so long ago, but also not. So a lot of leadership has changed and left, and a lot of things have been reorganized there, especially in the safety portion of the company. Sam obviously is back from that time in November. Ilya Sutskever, who helped organize the coup to remove Sam in the first place and then recanted, has left the company. Jan Leakey, who had worked on super alignment at the company, is gone. And we also have a bunch of other people in leadership positions, such as John Schulman.
All of them are leaving, dude. All of them are leaving. It's weird. It's weird. Like, why? OpenAI, dude, is worth $100 billion. They're losing $5 billion a year. Private investors are willing to pay a ridiculous premium on the stock. Why are you leaving? Your stock options could make you forget multi-millionaire, dude. Some of these guys could become multi-hundred millionaires if AI truly is, multi-trillion dollar opportunity across the board. OpenAI is going to be one of probably 7 to 10 players that's a real winner if they keep executing. I have 2 theories for why they're leaving. The first one is they don't trust Sam Altman, and that's a basic theory, whatever. Maybe they don't like him. The second one is more of a tangible one. It's actually the bull case for Palantir, why Palantir is probably, in my opinion, going to be the biggest beneficiary of AI. All of them are selling commodities. They're selling models. Models are a commodity. Models are just like, you just train models and you have different models every day. Gemini, Claude, Llama, GPT. There's tons of them. And so there's operationalizing those models, which is what Karp talks about, to make them useful to a business, to Wendy's, is not going to happen through again, asking ChatGPT about your supply chain data, because ChatGPT doesn't know shit about your supply chain data. You need an ontology. You need to operationalize that on top of an abstraction like AIP. You need to really bring all that together, and then you use the LLM to power the back-end computational infrastructure of AI, but not just training a model. So I think that's another really bull case on Palantir. If you believe in AI, then the models don't matter. What matters, more importantly, is making them work. And I think that's what Palantir is hopefully going to be able to do over the next decade. Okay. Shopify CFO. I love this guy, or not the CFO. He's the president. This guy is awesome. He's on CNBC. Let's hear from him. This guy always talks with a pep in his step. He really knows how to explain the business. So let's hear his perspective on the consumer and what's going on.
The best version of Shopify, Jim. We're focused. We're executing on the plan that we set up last year, and you're seeing our results. But I think this quarter,
and look how fast he's talking. I told you, there's something to it. There's something to it.
In particular, demonstrates a trend that we can achieve both seriously meaningful combination of growth and profitability. And just on growth for a second, I mean, when you exclude the sale of our logistics business, revenue was up 25% to $2 billion. That's our 5th consecutive quarter of at least 25% top line growth. On the profit side, gross profit was up 25% as well to $1 billion, which grew faster than revenue. And then, your favorite question, how's it going on the free cash flow side of things? Our free cash flow margin more than doubled from last year. It was 6% to 16% this year.
It was almost triple, Harley. You're very conservative today.
Well, I just, it's important now, whether or not, last quarter's results were, there was an overreaction in the market or not. This is a Shopify that is growing. We can grow top line. We can grow bottom line. We're getting some of the largest brands at the enterprise level on. Point of sale is doing incredibly well. And I think these results demonstrate that the plan is working.
Okay, so people felt last time that you couldn't balance between revenue and profit. I think you showed them that you absolutely can. How did that happen?
Yeah, I mean, first of all, it's really important for us to make sure that you remember, if you go back to when you and I first started talking, 9 years ago at the IPO, let's say,
we both had hair.
I still have some hair, but a little bit less hair now. we had one on-ramp into Shopify, which was e-commerce for SMBs in English-speaking geographies. Today, we're this unified commerce platform. We have brands of all sizes and all geographies coming to us for point of sale, for B2B, for online retail. If you just think about our actual enterprise business, and you look at sort of where we're at now, this quarter alone, you saw Casper, Away, Therabody, QVC, Barnes & Nobles, the largest brands and retailers on the planet are coming to us as well. If you then think about how some of our growth drivers are doing, look at Shopify point of sale for physical retail. That didn't exist 5 or 6 years ago in the way that it does now. GMV was up 27% year on year for point of sale, and we've now surpassed $100 billion in GMV for our point of sale product. So all these drivers are...
Bro, this guy knows his stuff. I mean, he's like, you should know the numbers inside and out. And like, when he talks like that, I feel like he's actually passionate about the numbers and he's able to recite them and explain them.
Working really well. We have our guardrails in place to make sure that we are very thoughtful about how we're spending, but the results speak for themselves.
Okay, so a lot of people are concerned about the macro. I was concerned about the macro when I read Etsy. It was very difficult not to be concerned about the macro when you read what Amazon felt about what was happening in their retail. What is your feeling on the state of the consumer?
Yeah, I mean, like you, Jim, we hear a lot of other companies talking about a softening consumer spend. Our data shows us that merchants on Shopify continue to outperform the broader market. And I think that's happening for a few reasons. The first is, remember that if you think about your top brands, the brands consumers absolutely love, those are all on Shopify. In fact, new brands are being built and more brands migrate to us every single day. But the other thing to keep in mind, our business model, what's really amazing about our business model is that we have a very diverse set of verticals of merchants. So we have, scrub companies like Figs and pet product companies like BarkBox. We have Nestle and Heinz and Mattel and Staples. So there isn't one type of particular type of merchant on Shopify. We're across all types of verticals. Also, we have a great direct-to-consumer business. We also have companies like Carrier who's selling their industrial heating products using our B2B product. So whether it's online, offline, D2C, B2B, local, global, these are the brands and merchants coming to Shopify, and we're seeing great success with them.
So, I mean, realistically, if you read between the lines there, he said the consumer is not really, he said people are buying. He says we have a diverse set of brands and people keep buying and their numbers are showing that people keep buying. And again, look, if people stop buying products from Figs, the scrub company he talked about, you would see it in Shopify's numbers. Not just Figs' earnings, but Shopify would have lower sales because obviously they're dependent on people buying stuff via merchants and they take a small cut of that. So if you're not seeing that Shopify yet, I don't want to say that means the consumer's clear at all, but that is another big hint of data. That's why I was scared of Shopify when it was at 50, because if the consumer's struggling so much, maybe Shopify struggles. It doesn't seem like that's happening.
Harley, it's David. We talk a lot here about AI and its impact in a real way. You talked about it on the call, but you said, leveraging emerging technologies to enhance your feedback loops. And you went on to sort of explain a bit what you're talking about in terms of sharper, more iterative feedback. But can you explain to our viewers how you're using it in the business and in a real way explain what exactly you're doing with the information that you perhaps would not have otherwise had quite as deep a look at in the past?
Yeah, I mean, we look at AI in two ways. One is how can it make Shopify's operational efficiency better? So, I mean, to your example, David, the way that we're looking at marketing channels, we're able to now experiment at a much faster clip. I mentioned this on the call a half hour ago, but in Q1, we began to experiment with an emerging new social platform. We put a little bit of money to work to see what the results would be. It worked really well. We doubled down on it in Q2, and we saw about a 50% increase in customers and merchants coming to us in the quarter from the previous quarter on that particular channel. This ability for us to make much smarter bets within, of course, the financial guardrails and an average payback period of 18 months means we can make smarter decisions much faster. Same thing goes in terms of how we arm AI, our merchants with AI. If you think about we have millions of stores on Shopify. We're now about 11% of all e-commerce in the US, and we're growing our market share considerably there. We're able to give our merchants great tools to make better decisions so they can place their own ads, so they can write better marketing content, so they can make better decisions to run their business. And in both cases, whether it's internally or externally, these types of innovations are making our merchants more successful, and our business is predicated on that. So
it looks like they have an AI plan as well. Again, no position in Shopify, but it looks like they deserve to be up. Palantir 2774, 20% today. Good numbers, strong explanation of the AI tailwind that could help them, which is obvious. I mean, AI on e-commerce, it's the recommendation. There's so many ways you can implement AI there. Basically everything Amazon's doing, advertising, there's a moat there. So there's a lot of ways Shopify can continue to expand. I do think it's a bit pricey here. I'm not going to lie. I've always felt Shopify is pricey, but then again, it might be one of those companies where it's pricey, but it's a company you know is around. And even if they dip really badly, the biggest brands in the world are not going to stop using. What are they going to use? They're not going to pay Amazon all the fees that Amazon wants. So they're going to use Shopify. They're not using Wix or Squarespace. And so it depends on the consumer, but over the long term, I think Shopify is going to be around. Shopify right here up 24%. And again, he talks really fast, dude. You get my point? This talking fast thesis, I think there's a thing. You talk fast, people trust you a little bit more. QQQ at 446, IWM at 205. So small caps still up for the day, but they're down a little bit from the peak. Dell at $90. SMCI, wow. SMCI is $10 away from going below 500. All right, so now we're getting into the 10:30 part of the market where everything takes a reversal. This has happened literally the past 4 days. Obviously, Monday it was reversals at the upside because everything was down so much. But around 10:30, 11, that's when we start to see everything get weakened. And then by 2 p.m., it heats up again, which is what literally happened yesterday. And then at 3:45, everything collapsed. But we might see a little bit more weakening. SMCI 17% down. It's so funny that it's down, right? Because everyone knows SMCI is a hardware business that has margins, but randomly the street says, oh, this is the quarter where we're going to punish them for having crappy margins. Like I mean, unless I don't know, 11% versus 15% margins. It's not like it's, that much different in the broad scheme of things. If you're not at 20, 25%, your margins suck. And the street knew SMCI's margins were going to always suck. So I guess now that they officially lowered the margins, even though they increased the growth, the street was like, all right, now we're done. We're dumping it. I mean, dude, Bank of America to lower the price target from 1,100 to 700, $400 off of margins declining. Like, you would think an analyst knows that margins are going to decline. I don't think that's an unpredictable black swan event on a hardware business. Palantir 27.94. Let's see if we can break 28 again. So it is interesting to see how they're thinking of it. Okay, we still have about 40,000 shares at 28. So we got to break through. We have to break through. We're testing it again. This is the second time we're trying to test 28. That's a good sign. That's a good sign. It's just the question of how much resistance stuck at 28. Hey, Mick, could you send that link? What link are you talking about? If it was the Shopify link, I was playing that on YouTube TV. They'll probably post it though on YouTube in a bit. Shopify is the number one. There isn't anyone close. I've been running online stores for 6 years. Yeah, that makes sense. All right, 27.99, dude. We're 1 cent away at this point. 28, it does, dude. There's a lot of resistance at 28. I don't even think my one share is necessarily going to help that, dude. There's a decent amount of resistance. We need a buyer to like step in and just knock down the wall. I'm surprised there's so much resistance at 28 though. After these earnings, you would think like the sellers would wait till like 30 after these earnings. So maybe it's like some artificial numbers that some arbitrary targets people put into. I mean, you probably got a lot of people that bought the dip at 21, 22, and they're trying to get out at 28, 28.50. But the resistance is heavy there. Amit, I was thinking, what if Robinhood comes out with some crazy plans for Pluto's AI, the acquisition? Yeah, we didn't even talk about that, dude. I think Pluto AI is going to be big for Robinhood. I don't know if they announced anything today attributed to that. But the Bitstamp acquisition, right? Like that's a big deal. Pluto AI LLMs for finance, that's a big deal. And then overall, their metrics are going to be like, I think it's going to be an amazing quarter. I'm curious how they present it and how they explain what the quarter looks like. So we'll see. Bitcoin, yeah, that's probably why Robinhood's struggling a little bit as well. Bitcoin just fell 2%. So Bitcoin went from like 57 to 55. So that's hurting Bitcoin as well. Macro geopolitical tensions. I think everyone on edge knowing that probably can get shares too much cheaper. Yeah, I agree, dude. I agree. I mean, Iran still hasn't fully done what they said they're going to do. They said latest is Wednesday. Today's Wednesday. So, I mean, if anything, you would expect something to happen today. That can put the market on edge as well, especially if it gets really bad. So that's another thing to watch out for later today. Is the same as Pluto TV? No, it's Pluto is an AI company that they acquired. The founder follows me on Twitter, and we were interacting back and forth on his NVIDIA. He posted a thread about how he's short NVIDIA, long Apple. And so we were talking back and forth on that. But dude's smart. He's 24 years old. He used to work at NVIDIA. He left NVIDIA because he got bored, built a AI finance company, and then Vlad buys him out 2 months ago. I think for like 30 million, because they raised they were valued at 12 million in the funding round, so he probably got a double on the premium, especially given AI's hype right now. I don't think it's paid more than 30 million, but if they got a good deal on that and they can make an integrated financial LLM, which I think everyone wants. Like if you ask ChatGPT, hey, what was the S&P trading at in 1987 on March 3rd? It should be able to tell you the exact number. The problem is it'll tell you a number, but it's fake. And like when you check it, you're like, how the hell did ChatGPT come up with this number? We need like a real LLM that can do that, because that's how we actually like can move faster when it comes to making decisions and investing and doing research. And I think that's what Robinhood's trying to build. And if they do that, dude, I think the whole world's going to use that shit. I don't even think you need to be on Robinhood to want to use that shit. Like everyone's going to want something like that. I mean, who wouldn't want something to be like, tell me the PE ratio for all the weed companies right now. Boom. Search, get it. Versus going on tip ranks, filtering by cannabis, trying to like these stock screeners are a thing in the past, dude. These stock screeners to me have no moat. None of them. They charge $30 a month. I mean, I use one of them, right? Like it's helpful. But if I had an LLM where I could type in my question and boom, I get the answer. Like, dude, the stock screeners have no moat. It's not reliable. I mean, it's not going to be as effective as AI if it becomes more reliable. Someone says ChatGPT is already very competent at financial analysis as long as you feed it the numbers. Yeah, but see, I want historical data. You know, I want to be able to tell an LLM, compare Reddit and Google's advertising growth based on their user growth. Maybe I'll do Pinterest because Google doesn't report users. Give me Reddit and Pinterest's trajectory on their user growth versus their ARPU, and then compare that to their historical PE over the last 5 quarters. And I want to be able to get a chart or some data that immediately tells me, oh, Reddit is growing faster than Pinterest and it's cheaper than Pinterest because of XYZ metric. And then I want to say, give me some ideas today about 10 advertising stocks that aren't as popular. So it should be able to synthesize news and be able to say, hey, Amit, I'm going to use a bad example here because this is a very popular advertising stock, but the Trade Desk is a stock that's big in advertising, but it was mentioned in the Newswire 45% less than Meta, which is obviously Meta's, the biggest advertising play. Like I want to be able to get that type of data. I would pay a good $100 a month for something like that. And I think that, dude, if Robinhood makes that for $5 a month, part of gold, come on, bro. I think everyone would love using something like that. So we'll see. We'll see if they can figure that out. Fortinet's still up 23%. Robinhood's still flirting, or not Robinhood. Palantir flirting with 28, 27.91. It touched 28 for like a second, and then it came back down. So we got to see if we can get back to 228 again. AI needs a truth maximalist, similar to how Elon is a free speech maximalist in social media. Yeah, but it's hard, right? It's hard to be a truth maximalist, especially when you're working with numbers. That's also why Vlad is building this like startup. It's called like Hypersonic or whatever, where he's building like mathematical LLMs. You guys remember we talked about that a long time ago? We haven't heard new updates on that, but I imagine maybe that the technology that he seed funded that startup, maybe that's powering Pluto to some extent. Like I think they're really working to solve that problem. And if they do, I think it'll go well. Palantir still flirting, trying to get to 28, trying to get to 28 here. Oh, it's called Harmonic. That's what it's called. That's Vlad's thing. It's called Harmonic. It's this AI math LLM startup. 27.99, still fighting. Again, there is heavy resistance at 28. There you go. The red candle comes right at 27.98. Let's see. Still up 5%, dude. Still a good day. Up 5%. Still up 5%. Wendy's helped, and Japan definitely helped as well. Intel at $20. Royal Caribbean, they're up 2% today. Upstart, wow, 36%. Congrats to Upstart Bulls, dude. Congrats. You deserve it. I don't know if you deserve it, but you earned it. I don't even know if you earned it, but I guess the market is irrational. So, like, you got it. I don't know if you deserve it or you earned it, but you got it. Well, no, everyone earns it. If you buy it cheap and you sell it high, you earned it. Again, just the numbers. I don't know how you justify up 36%. If any Upstart Bulls know about a number that I don't know about, let me know. But it's up. And if you had calls on it, then you're really up today. Yeah, dude, 27.95. We really can't crack through 27.99. It's getting tougher. It is getting tougher. What else do we have here? Zoom out on the Upstart chart. Yeah, it's been bad. It's just if you did an earnings trade on it, it's it's been good. It's been good at least yesterday. Do you think Elon is becoming more conservative after buying Twitter? I think Elon's become more conservative over the past 3-4 years. Remember, Elon voted for Biden. He voted for Clinton. He voted for Obama twice. He's always been Democratic, but I think a lot of stuff that happened with his daughter and all these different things, or his son at the time, right? A bunch of different things have happened. Robin at 1743. Lots of different stuff has changed his mind. Now he's going to be interviewing Trump on Twitter Spaces. That is going to be very interesting. 18,000 shares waiting at 28. All right, so the resistance is going lower, but still 8 cents away from 28. What other news do we have? What else do we have going on? Let's get a little bit of coverage on semis. I'll keep you updated on the on Palantir if we cross 28. Let's get some coverage on SMCI as well.
Rose due to the company's build out of artificial intelligence data centers, which require costlier liquid cooling equipment inside those centers. The company's CFO also said shipments remain constrained due to supply chain bottlenecks. Guys, there was a lot of questions as to whether Supermicro, which is a supplier to NVIDIA, would acknowledge the Blackwell delay. And the CEO did acknowledge it and also expects shipments to come in early in 2025, which is relatively...
Oh, wow. So it's real. The Blackwell delay is real. If he's acknowledging it, that means Blackwell, that wasn't a rumor. That's legit for NVIDIA. Palantir 27.99, still not getting 28. I'll switch over if we get it, but still hitting some resistance.
In line now with what Wall Street is expecting. So I think that's why you did see NVIDIA shares move up a bit in today's trade. We did see Bank of America, though, downgrade shares of Supermicro. Their concern is that if you look at free cash flow in the fourth quarter.
Okay, I'll get back to that in a second. We broke through. We're at 28. Damn it, dude. In the time of switching the screen, it went below 28. Dude, I think it's a win for the day. Oh, there you go. We're at 28. It's a win. It's a win. We got to 27.99, 28. Hopefully we can break through 28. But yeah, at this point, it's just a question of when the market get some volume to break through it. But at least we got there. All right, let's go back to this.
It's negative, and they think that raises the expectations or likelihood that Supermicro will go back to the capital market to raise money. Remember, earlier this year, David, Supermicro did just that. They issued debt, they sold stock. So now the question is, given the amount of money needed to build out these data centers, if they will have to do even more.
Yeah, saying Blackwell may postpone how much we don't exactly know on the call. Dell is also down in sympathy, I guess, as well, and reports earnings tomorrow.
That's right. So within the AI server market, as you know, Dell is Supermicro's main competitor. They both are suppliers to NVIDIA. They take NVIDIA's chips, package them into AI servers, and then sell them out to the hyperscalers. What Dell doesn't have is the free cash flow issue that Supermicro has, which Goldman Sachs says is one of the reasons they like Dell over Supermicro. In fact, here's a chart that shows that even though Supermicro is the leader in the AI server market, both Dell and HP Enterprises have been quickly gaining market share.
Right. So the older businesses of Dell and HPE, the traditional kind of cash cow businesses continue to support what they need to invest in the new ones. I mean, the big debate to me among analysts and investors when it comes to Supermicro and Dell is, they were given this premium multiple as being very highly leveraged AI plays. And now it sort of seems like the economics are not going to be there in that generous a way for those players, right? The ones that are essentially repackagers and installers of the technology, as we saw with the margin pressure on Supermicro this time.
And we thought that conversation was sort of confined to the hyperscalers around the return on investment for artificial intelligence. But now the chip makers that are so reliant on that CapEx, now they're having that conversation too.
By the way, the stock split, there's no magic there anymore. NVIDIA and Chipotle have both traded very poorly off of their stock splits once they became effective. So I guess that's not direct support for the Supermicro.
That was interesting because at first the stock moved up on that 10-for-1 stock split. Then investors had a second to sort of a deeper read on earnings, and the stock now selling off here.
Yeah, we should point out NVIDIA shares had been up at least 3% in the early going having cut significantly the gains so far. You can see NVIDIA shares now up, let's call it 0.5%. By the way, the NASDAQ.
So as you can see right there, SMCI obviously impacting NVIDIA, Dell. That's why Dell is down today. SMCI still Palantir 28, but it's hard holding 28. SMCI is now down 15%. So SMCI getting a bid at 504, recovering at 500, 504, but now at 518, still down 15% on the day. Amit, is the IV on Hood calls too high? I think, look, if you're buying Hood calls, I would buy leaps. I would not gamble on earnings. If you are buying calls before earnings, it is quite literally gambling because we have no idea how the market's going to react. But I think at 17, I like the $20 strike for 2026. That is the strike I like for 2026. The IV is a bit high right now, obviously, because you're going into earnings and because it's taken a dip. Hood right here, 1750 up 1.5%. But I would not be buying weekly or monthly calls because we just have no idea how the market's going to end out in the next couple of weeks. Okay, where's Palantir? Are we? Yeah, right below 28. Damn, dude, 28 resistance. This is the largest resistance I've seen on 28 in a month. Like in July. Oh, there we go. 2804. There you go. In July, we were easily breaking 28 daily and just hanging around 28. 5.36%. Again, dude, I don't think it's expensive anymore. Like last quarter with the growth, 28, 27. I mean, technically, yeah, it's still a little expensive, but if they're going to get to 30% growth, which they're going to get to, they're at 27%. You know, the management knows, hey, 3% on that top line number looks really good. It's not like they're going to be like, oh, we should try to get 29%. Like, no, they're going to work their ass off to try to show 30% top line growth. If not by next quarter, then definitely, I think by Q4. That is my prediction. And if they do that, the street's going to look at a company growing 30%, which is the magic number in SaaS, with adjusted operating margins of close to 40%. It is a no-brainer. If the macro holds up, we're going to be done with the roaring 20s, and we're going to make our way into the 30s. So let's see. Let's see what happens. The implied volatility on Hood, let me check. I think it's like 15%. Let me check for Hood. The market wants 642 million, which is pretty, dude. The market thinks they're going to get 642 million or 632. I like my bull case was 650. So market does have some high expectations here, which means that there could be a chance we miss. But the funny thing about expectations, dude, is every company knows about expectations like 2 months in advance of their earnings coming out. So if they miss, it's because they weren't able to get exactly what the street wanted. But everything's based on expectations, right? Literally everything, EPS, revenue, it's all based on expectations. So the market wants them to do 15 cents. They want them to do 642 million. I think they're going to do close to 650 in my bull case. My base case is 618. So I have to be right about my bull case for them to beat on revenue. And then EPS, I think they'll be fine. But yeah, I think the implied move is 15%. That's what it looks like right here, 15%. So if we get 15%, we should be good. Palantir 2805, Crowdstrike 240. S&P 530 up 1.5. And where's NVIDIA? NVIDIA at 105. NVIDIA up 1.3%. 28, we're starting to settle into 28. Oh, wow. As soon as I say that, dude, 27.96. Goodness gracious, bro. Today's one of those days where it's just a little moody, bro. A little moody. It's just, it didn't have lunch yet. Maybe we should go to Wendy's or something. It's just not settling in at 28. Kramer just endorsed Palantir. Oh boy, that's why we have the resistance at fucking 28. That's your resistance. That's resistance. It must be so frustrating to be nailing a quarter and then with a month to go, expectations skyrocket and you dip after earnings. That's the thing. So the estimations for Robinhood, I don't think they were 642 a month ago or 2 months ago. I think they got revised, which is a good thing because it means analysts are more bullish. And usually they get revised, by the way, when they talk to the. I mean, that's why Palantir got this $28 price target from Citi and Jefferies, because they visited Palantir and they talked to the management and then they come out with a price target. So if the estimates got revised from like Wolf Research, et cetera, on Robinhood, it's because they talked to the CFO, et cetera. But that does mean that, the company better put up the numbers that these analysts are expecting now. And you kind of can't get that mad at the analysts if you met with the analyst and you said, hey, things are going really well. And then the analyst was like, all right, we'll raise you a couple bucks. And then you don't meet their expectations, right? So it's a game of scratching your back, really, when it comes to this stuff. It's very political in some respects, which is why they keep such a good relationship with the analysts, dude. That's why even if you hate an analyst, you want to treat them so right, because it's sad that the analysts have that much impact. But if you're the Bank of America analyst on Robinhood, like Mariana is for Palantir, whatever you say about Palantir is what hundreds of, if not thousands of clients that pay for Bank of America's research are going to do. If you say buy, they don't have time to forget even watching my videos, reading your report, dude. They have to make decisions every day very quickly. Bank of America, we trust them. We pay them a lot of money every year. They say buy it, fuck it, buy it. They say 28, all right, it'll go to 28, right? That's how they act. So when you get a downgrade, that's why you get such a sell-off, because a lot of these funds, they don't care. Bank of America downgrades Palantir, all right, sell it, let's move on, right? They have to be cutthroat in making their decisions because they're fighting for forget nickels and dimes. They're fighting for pennies because they're managing so much money. So the analyst upgrades and downgrades do matter. And now we'll just have to see if they can meet the expectations by the analyst. Enphase up 6%. Enphase 108 getting some love right here, up 6%. Just got me picturing Carp scratching Dan Ives' back. That's funny. That's so funny. Dan Ives did raise the price target to $38, by the way. Amit, did you see Ileana's tweet regarding Wendys plus the giveaway? Yeah, so Ileana did do a tweet today. He's doing a giveaway. I don't know if the giveaway is done, but he said if you show up to Wendys wearing your Palantir hat, he's giving away $100 Palantir store gift cards. By the way, the store is launching next week again with new stuff because the hats got sold out. So they're going to launch a bunch of new stuff. So we got some people already commenting with their hats. Yeah, look at that, dude. That's so cool, bro. This is why this community is so fun. I don't like Frosties, by the way. I don't like soft ice cream. He said you have to get a Frosty with a Palantir hat. I don't like soft ice cream. I like hard ice cream. Now, forget the soft, hard jokes that went through everyone's head. I'm not going to make the joke because that's predictable. And as a comedian, I don't do predictable jokes. So, but I do like ice cream that's hard. I don't like soft ice cream because it feels like I'm eating soup. And so I've never been a fan of soft ice cream. I want the ice cream that's hard. It's from the carton. And it shouldn't be melting too much because if it melts, it feels more like milk. And I don't I'm very particular about this. So you guys are learning more about me every day. This mayo, honey mustard, maybe I am a picky eater, dude. Maybe I am. But look at this. Look at this. So we have Cindy right here. Just got a Frosty for breakfast here on the West Coast at 7 a.m. They are just firing up the machines. Frosties everywhere. Look at that. She's wearing a Palantir hat. This is so awesome, dude. This is so awesome. Look at this. This guy with his, that's Amir. Amir with his dog. This is so cool, dude. Such a cool community. So cool. So cool. So yeah, I'm a hard ice cream type of guy, not a soft guy. Liquidate the soft ice cream. Dude, can you believe I said liquidate my balls the other day? I meant to say I needed to go pee. Palantir 2811. There you go. 2811. All right. So now it's breaking out a little bit. I thought I sounded smart too. I was like, yeah, guys, I need to go liquidate my balls. And then I'm at the bathroom. I'm like, wait a second. That doesn't, there's urine is it's in a different area. I was like, oh, wow. Well, that's a hell of a sentence. It's a hell of a sentence. If you think Hood is a good deal at 15 and below, then sell some 15 will be a good option. Yeah, selling some $15 puts, I think, is a no-brainer on Hood. I think the premiums you can get right now on Robinhood, let me check. The premiums have to be up for earnings. I think that's actually, if you're not going to buy calls, which is much more risky, selling puts, if you believe it's a good price before earnings and you're very happy to buy the shares down 20% because you get paid to do it, which is why I like selling puts, that's not horrible. So August 23rd, Hood sell put, $16 strike is 75 cents a premium, $16.50, 95 cents. If we go out to August 30th, the premiums aren't that good. I thought the premiums would be better. 85 cents for $16. If we go to September, so an official 30 days from now, yeah, September is better. So $16 strike will get you 91 cents, which means your cost basis would be $15.09 because the math, 91. So 15 from 100. So 15.9 would be your cost basis. That's not horrible either. 28.25 on Palantir. That's not horrible. And that's a month out. So yeah, and that's why I like selling puts when a stock goes down, because if you believe the stock has bottomed or you believe you're super happy to buy it 20% lower, then at least you get paid to buy it. And then if you do have to buy it, your adjusted cost basis is lower than your strike. This is where selling puts, really comes in handy. S&P trying to go to 531. Lyft down 12%. Lyft recovering a little bit. Palantir now a real breakout above 25. We need to get to 25.50 to see if there's a chance for 29. But you got a real breakout above 28.25. Not bad. Not bad at all. Okay, so let me I have to get my charger real quick for my phone because of course the charging case on my phone is out of battery. This is this is the most Amit thing ever. It gets a charger case for his phone. The charger case is out of battery. So let's put on CNBC. I'll go get the charger real quick and then we'll keep going from there. I mean, I really do like the charging case, but the fucking then I have to charge the charger case. Like, it's kind of annoying, dude. It's like I don't want to have to charge the charger case. Like, I need an infinite charger. I need a battery that just doesn't die. That's the bull case for a Novix. If they figure it out, I mean, I pay a lot of money for that iPhone. Okay, let's get some coverage on Disney, and then I'll be right back.
The stock looks to be down, not sharply, but down nonetheless. The attendance at parks, what was somewhat anemic, is outweighing the first real profit from streaming and the positive signals that sends. Hugh Johnson, the company CFO, Jim, some time back had shared the word normalization with the street. And there was never any in the conferences since then. Nobody from the company, Iger, or anybody said anything more positive about it.
Right.
And so perhaps not that big a surprise. That said, these numbers, given where the street was in terms of parks, they came in well below.
Right, but you might have an opportunity here. First of all, the stock is down very, very big. Yeah. And the reason that opportunity here is that there had been a convincing element that Comcast Universal did not have great numbers for the.
No, Comcast did not have good numbers.
I don't like Disney, by the way. So let's listen to the bull case, but I've never been a fan of Disney.
As well, which gave Disney investors pause a couple of weeks back when we heard from Comcast.
Right, so when I went over all the different pieces of research, what I came back with was that people, Comcast revenue decreased 11%, that Disney, they had been shading the numbers down for theme parks. And somehow, I don't understand why the analysts were so far off the mark. Because maybe, though, this is just episodic. I thought that what was far more important was streaming. Because what will happen is, TripAdvisor's not that good, Airbnb's not that good, we saw the airlines not that good. David, if theme parks are going to come.
See, but he's wrong about that. He's trying to make an analysis between airlines, and airlines are great. Forget the Delta CrowdStrike stuff. Airlines crushed, dude. Airlines had good earnings. United is up. Delta Southwest is up. So people, we went through the stats, right? There was 3 million people on a Sunday that went through TSA check. So maybe it's people don't want to go to Disney. Maybe that's the difference here. Maybe it's not just travel.
Come back, because that's what theme parks do. And I really think that this is.
And your point's a very good one, because again, the company seemed to be saying things are not what they were.
Right.
And in the call, Hugh Johnson obviously giving voice, and on an interview earlier with our friends at Squawk Box, giving voice to the weakness of the consumer. But these numbers, again, came in well below, versus expectations. But streaming was strong. Let's listen to Hugh Johnson, because this does have broader ramifications potentially for a lot of the concerns around the consumer, which we can get to as well. Take a listen.
The lower income decile consumers are a little bit more stressed, and they're dialing back and watching their dollars more. At the same time, higher income consumers are traveling internationally much more, and we can see that in the data that we get. Those people, we think eventually they're going to come back, and as they come back, the attendance will start to come. So, one of the things about this business, and it's a great business because it has such terrific IP, it tends to get hit late, it gets hit less, and it recovers early relative to the other theme parks that are out there.
Thoughts?
Hugh Johnson is a straight shooter. Everyone knows that from his years at PepsiCo. If he tells me that this could be just episodic, things can come back, I'm a believer in him, which makes me think that if you can buy Disney down here, you should buy Disney down here.
Interesting.
I don't know, man. I don't like it. I don't like Disney. I don't like Disney. And my thesis is even simpler than that. I just feel like Disney Plus is not interesting, and it doesn't have enough content to just, like, when's the last, okay, some of you guys might have kids here, 28, 25 on Palantir, so you have Disney Plus playing a lot, but does anyone really go to Disney Plus to watch anything, dude? I don't think I've opened it since Christmas, and I opened it on Christmas to get some nostalgia from Christmas movies that I watched when I was younger. Outside of that, And that's the real bull case for Disney is the content business. And although they have Hulu and all this other stuff, I just feel like it's not the most integrated play. ESPN is there as well. So that's why the stock's like not collapsed in this new streaming era, because they've lost a lot of their cable subscription revenue and advertising. It's not zero, but it's significantly decreased since they've gone direct to consumer. But direct to consumer, you have to subsidize by taking a loss. I mean, they gave me Disney Plus free for like 2 years when I signed up in 2019, just to like get me on. And I think now we pay for. I don't even know why we pay for it, dude. Like, realistically, we should cancel Disney Plus. It's just one of those things I've been lazy about. But I just don't watch it too much. But it is for the kids. The kids do love it. You don't watch anything besides the charts, dude. That's true. That's why I'm so happy I found a show, dude. You guys don't understand how happy I am for finding Prison Break. I need at least a couple hours at the end of the day where I'm just not thinking about markets. And last night when Japan fucking decided to stop cutting the rates, I mean, I went right back into market mode and I started like analyzing it and putting out content. Like there is a part of the day where I just like do not want to think about it because it becomes all encompassing. And so I need an escape, and Prison Break is the escape. So for some people it's The Mandalorian. But I think for a lot of people, it's more stuff on Netflix and Hulu adult, like, regular TV shows versus, I was gonna say adult content, but that's not what I mean. I mean, you guys know what I mean. Like, like a real show or something, like not cartoons or Winnie the Pooh or anything like that. Ever watched Sons of Anarchy? I have not watched that one. I have not seen that. Inside Out 2 was really good. Well, they made a lot of money on that. Yeah, they made like $1 billion in the first week of that. So that was also very good. Okay, where's Palantir? New York Times at $55, Nvidia 106, Palantir 28.20. All right, so we're holding 28. Dude, we're up 6% on the day. You can't complain. This plus earnings, we're up like 25%. We were up a lot more. We were at 21.40 for a little bit. I mean, let's look at this stock on the past 5 days. Look at this shit, dude. Look at this on the past 5 days. $20.69 at 8:15 2 days ago. Then spike up to 28.79 after earnings, after spiking up to 24.27, chilling out at 24, then spiking all the way up, and now settling in at 28.30. What would have happened if we were at 28 before earnings? I mean, would we be looking at a 3 handle right here? I think there's a shot. If the market didn't give out, I think there's a shot. We would be easily looking at a 3 handle. So I think it's coming, bro. I think it's coming. Enovix is up today. Where's the Enovix? Enovix 11.58. They're up 9%. That's good. SoFi 6.74. They're up 4.8%. SoFi did lose a major client yesterday. Actually, no, that's wrong because Noto responded to the tweet, so they didn't lose a major client. They just never had that client in the first place, I think. But Tanner posted something about SoFi and their tech business. But SoFi's up 4%, so that's good. It didn't deserve to be like it was, dude. It was below $6, right? It was $5.74. Yeah, $5.74. So I mean, whoever got it at $5.74, I think that was a good buy as well. Like, yeah, $5.74 was a new low that we haven't seen since the $4 lows in May of 2023. That's when I initially bought the $7 calls back then. So SoFi having some momentum here as well. Something is wrong with the market. PayPal's up 3%. Well, PayPal had a great earnings. They deserve to be closer to $80 in my opinion. But the fact that they're up 3%, maybe we are seeing a little bit more recovery. Shopify up 23%. Robin at 17.55, up 2%. Crowdstrike 240. Celsius 42. S&P at 530.7. They lost the client back in 2022, but we just found out about it. Okay. Yeah, because Noto tweeted some paragraph, and I was reading it. I was like, I have no idea what he's saying right now, but I was like, I guess he's correcting Tanner on this. So, yeah. The point is the tech platform is not growing as much, right? And that's the biggest thing holding them back. But, and some people on Twitter are posting charts of like showing SoFi and showing Palantir's revenue growth together. And, they're trying to be like, well, like they're both growing the same. It's like, there's a difference. This is the thing. I don't think a lot of SoFi investors, there's a quality. Palantir is powering Wendy's 6,000 supply chain networks or 6,000 stores to make up their entire supply chain network. You pay a premium for that. SoFi is SoFi. You're just not paying the same premium. Even like the idea that a company's growing the same as another company, therefore they should get the same premium. I don't understand it. And some of the SoFi bulls are like gung ho on this argument. And I'm like, dude, they're different companies at the end. Like, you're buying a company, you're not buying a stock. And like, if you're valuing the stock based on just the growth, that is a fundamentally incomplete valuation. So I do think Palantir deserves a premium, and there's a little bit more importance there than some of this other stuff. Amit, how hard did Rocket Lab get hit? Okay, let's look at that. Rocket Labs up 2% of the day. Rocket Lab went, I think, below 4. It went to $4.12. So not a crazy hit for Rocket Lab. Now it's at $4.80. It's not a crazy hit. Did they ever say what they're paying Palantir? No, we don't have a number on the deal, and we don't have the years, but they are using them. I mean, if you're using them for see, here's the thing about these deals, right? Wendys goes to Palantir, says, "Hey, can you power our supply chain for 6,400 stores?" Palantir's like, "Sure." They start using it, start seeing results. A, what is that worth? I think that's, a multi-million-dollar question in the future. B, are you really going to switch your entire supply chain operations to a new company after you've used them for, let's even say, a year and you've gotten good results? Forget even good results. If you get some results, because most of these companies get horrible results when they integrate software. Like, what if you're getting actual transformational results? You're sticking with Palantir for life. This is why it's a company you fucking go long. Like you've really played the long term here. And same thing with Robinhood. I know Robinhood's a fundamentally different company, but the user experience you get on Robinhood, the amount of value you get for the product, it allows me to feel comfortable going long. I don't get any value from SoFi, and I've used the product before. Unless you're taking out a personal loan, which is fine. You're getting some value for that, but then it's just the bank. Like, then it's not a encompassing product that is powering supply chain networks or even making it easy to buy stocks and sell options on them. They don't even have level 1 options, right? Like, this is the type of stuff where I think we really have to figure out, hey, is the company providing a thesis to go long on, like really long on? Even if even if there's obviously faults to the company, which there's faults and bear cases to every company, can you withstand that over the next decade? And I think obviously Palantir and Robinhood have characteristics of that. So Palantir right here at 28.13, 5.8% up. Fortinet's still up 24%. And then the Qs at 447, they're up almost 2% right now. Amit, do you have Rocket Labs? A little bit, not a lot. I don't have a big position like Matt. Matt is very, very bullish on Rocket Lab. I like it. I don't have a ton of cash, and I don't know. I think under $5 it's cool, but again, I think it could be dead money for a while unless it really works. I think the CEO is amazing. The documentary they put out on HBO, incredible. I think if the investment goes wrong, you can't blame yourself for like missing something. I think the thesis is there, and I think the CEO is very passionate about it, and he's executing really well. But the rocket business is very CapEx heavy, and they've got to be successful. So over the next few years, if they are, then I think Rocket Lab should do well. Okay, guys, I think that's pretty much it. I don't think we have any other crazy news. Palantir at 28.13, so that's the one winning today. I'm trying to see if there's any other big news today. Oh, wow, here's a headline. Intel passed on investing in OpenAI back in 2018. Bob Swan, the CEO, did not think generative AI would make it to market in the near future. Holy crap, talk about a headline. Wow, Reuters reported that. That's wild. That's wild. They could have had a little, I mean, they're having a little bit of OpenAI before Microsoft. That would have, see, you need to, if it's, this is like in 2018, you needed to understand LLMs. And I think very few people besides the people at DeepMind and obviously OpenAI people and Elon understood the power of LLMs. Palantir was working with this stuff a while ago, but they were more focused on the ontology part of it. So if you understood that in 2017, 2018, made strategic investments, you would have set yourself up for the next decade. But some people didn't see the vision. Michael Saylor just announced he owns 1 billion of Bitcoin. Michael Saylor's just made that announcement. Disney owns 8% of Epic Games following the $1.5 billion invested in the company in Q1. What is this? Pop-Up Bagels and Mondelez owned Oreo just made a new flavor, cookies and cream cheese made with Oreo. I know it's not a super tech headline, but still, cookies and cream cheese Oreo. I don't know, dude. Okay, now if it tastes kind of like a cheesecake, but I don't know if a cheesecake tastes the same as like cream cheese flavor on a bagel mixed with Oreo. This looks like it's not going to taste that good, but I want to try it out. I'm not opposed to trying it out. Now, if they said cookies and mayo, like I would boycott Oreo for the rest of my life. I would try it out. Even though I think it's still going to be nasty. Jose says, while if they would have invested in OpenAI, they would have understood more about the needs of GPUs, so they could have probably doubled or tripled down on GPU design investments and been a massive company. Yeah, that would have probably changed the entire trajectory for Intel. The entire trajectory. But one move of just not understanding where LLMs and GPUs were going changed everything, right? I mean, GPUs, LLMs are the reason GPUs are so valuable, right? Because you need so many of them to train the LLM, which is why everyone's fighting over like, what the hell is the use case for the LLM? And if Intel understood in 2023, 2024, people would start asking ChatGPT, hey, can you translate "Thank you, Bank of Japan, for not raising rates" in Japanese, and get an answer so that they could recite that on the morning open. That's where at least one use case exists, right? If they saw that vision, they would have doubled down on that. Amit, do you think Hood can get at least to half the market cap of Schwab? Schwab is at 115 billion. Yes, I think Hood's at 15 billion, so half would be Hood getting to what, 50 billion. So that's basically a triple from here. Yeah, I think over the next 5 years, Hood gets 35 million accounts, 500 billion AUC. I think a triple, which is a half of Schwab, is not crazy. Remember, the reason Schwab has 9 trillion in assets, but it's only valued at Palantir going down again at 2803. The reason it's only valued at 115 billion is because they're not growing. Schwab doesn't grow. I think they grew like 1% last quarter. Robinhood's growing 40%. So the market's going to pay a premium on that. And, their EPS is expanding. Let me get Schwab stock. So if Robinhood can get assets like Schwab has and they keep up the growth, which is going to be hard to do. It's hard to keep up the growth when you get that big. But in the meantime, I think that's where the bull run happens over the next 4 or 5 years. So Schwab is down 14% over the past month on their earnings. It's Robinhood's market, dude. They got to try to go take this market, and we'll see if they can do that. Upstart up 45%. Wow. 45% Upstart. Is this kind of meme-ish? Palantir right back to 28.14. So Palantir fell to low 28s. Now it's right back. Upstart. Wow, dude. Congrats to whoever saw this. 45% on Upstart. That is not bad. Banks are just as important as the stock market in providing capital to people and businesses. Correct, but there's a lot of banks. There's tons of banks, dude. Like, at the end of the day, I don't even really see a need for why I would go to SoFi over Bank of America, dude. Like, the app is not that much better to make me leave. And SoFi still doesn't have small business accounts. I have a small business. I have an LLC. So I would have gone to SoFi a year ago if they had some. I would even consider going today. It would be annoying because I'd have to switch everything, but I would consider it. But they don't even have small business yet, right? So it's like, and again, when I critique SoFi on the invest part of their business, it's not the main part of their business. So it doesn't matter. The main part of the business is lending. My issue is that all the SoFi Uber Bulls want it to be seen as SoFi is much more than a bank. But then they complain when you do the Robinhood comparison. But I'm like, you want a tech multiple. Robinhood's actually growing like a tech company. SoFi is a bank which has to trade at price to book. Some growth is there, but you want it to be valued like a real tech company, but the tech part of the business is not growing. So why are we even doing the comparison? So if that's the case, it's a bank, then it's a bank. Then we talk about it as a bank. And if it's a bank, then I don't know how many people are leaving JP Morgan and Bank of America for SoFi over the next 10 years. And so that's where you come into the valuation issue at that point. 202 on JP Morgan. Now, granted, I say all of this. I know it's a bearish take, but I think SoFi closer to $9 end of year. I still think SoFi $9 end of year as IWM and small caps rally. I think SoFi does well. So I still think end of year it does well. But the tech side of the business obviously needs to grow a lot more to get people excited about giving it a multiple. Douglas says, yeah, I wanted to use SoFi for my holding company for my laundromats. Shout out to Douglas, by the way. He bought a crap ton of laundromats. So he's putting some of those Robinhood gains into cash flowing businesses, which is the right way. You make some money in the markets off some speculative options. You throw it into a basic business like a laundromat and you get cash flow, baby. That is the American dream. The American dream is you make some money off the stock market, use a little bit of leverage, use some, appropriately use options if you can really exacerbate the gains. Even if you don't, any money you make in the markets, put it into something that cash flows. And then boom, laundromats are going nowhere. Everyone needs to do their laundry. That's a successful use case of the American stock market. So Doug says, a year later, SoFi said they were working on small business accounts, but I still don't have it. And that's why he's not using SoFi for his holding company for the laundromats. Yeah. So that's a problem. That is a problem. He wants to launder the money. Dude, if I owned a laundromat, dude, I need to buy a laundry. Okay, so I was thinking about this over the weekend. I have a dream, and I know what I want to do when I get to a net worth of closer to 1.5 million. Wow, Mr. 100 just dumped 6,000 Bitcoin. That's not good. Dude, didn't he buy 6,000 Bitcoin yesterday? What? Why is he selling so much? That is interesting. Maybe he thinks the Iran thing is going to tank it and he'll buy back cheaper. Interesting. I'm going to try to pull up that tweet. So I have a dream. When I get closer to like 1.5, 2 million in net worth, which hopefully happens over the coming years, I know exactly what I want to do. Yeah, dude, he fucking dropped. Why is he selling 6,000? Look at this. He sold 6,000 Bitcoin. Interesting. Very interesting. That's a lot. Mr. 100 is the guy that buys like 100 Bitcoin every day. That's interesting. Well, I guess we'll see what he's thinking. Okay, I want to buy a liquor store. I want to own and operate a liquor and convenience store. I want to have one of the best liquor stores in New Jersey. The reason for this, Palantir 2819, is because my dad owned a liquor store for 20 years. It was called the Boyden Pantry. It was in Maplewood, New Jersey. And a pantry is like where you store stuff in a kitchen, right? The closet. And it was near Boyden Avenue. So I want to reopen a liquor store. And I legit want to be the Indian guy that made money in the stock market and then started a liquor store. Because this is what Indians do. We start liquor stores. And I kind of take that with a sense of pride, dude. I think when I was little, I felt like kind of ashamed that my dad owned a liquor store because it felt like an unsexy job. And as I've grown older and I've just appreciated America, I was like, no, dude, just because your friends had, parents that were like doctors or working in technology, like at the end of the day, your dad fucking worked for every fucking penny. And he ran a business, dude. He ran I remember the suppliers, the vendors coming in. It would be so fun when I was little, dude. They would bring like all this ice cream and all these chips and cookies because they were like filling up the store and shit. So it was super cool experience. But at the end of the day, my dad ran a business. And I think that's where my entrepreneurial tendencies come from. Unfortunately, by 2011, the business just wasn't doing that well, right? And he had to close it down because I think he would have been still operating the liquor store if it was doing well. But that's when he made it his first like real career pivot because there was some family issues, some drama, stuff happens and the liquor store just ended up not doing that well. My dad, he's not as decisive sometimes. We should have opened up a deli in the back. We were going to do it, didn't do it. So regardless, didn't do that well by 2011. We sold it. I want to reopen a liquor store. I think that would be cool. I think that would be really fucking cool. I know it's a hard business. It's not easy. If I had the money, I wouldn't pick Dunkin' over the liquor store. I would pick liquor. Because I actually do want to open a Dunkin' Donuts as well because Indians do that too. But maybe when we get to like 5 million, then we can do that. But as much as I love Dunkin', I would want to open a liquor store and I would want to call it the Boyden Pantry. I want to call it the same thing my dad called it. I don't want to run the liquor store. Okay, I don't want to be there all day, but I want to operate it. And I think that would be really cool. The liquor business is in your blood. Yes, correct. But what's not in my blood is liquor, dude. I don't drink. My dad doesn't drink either. So it's really funny. I was surrounded by Jack Daniels, by Hennessy, by Smirnoff, by what other fucking brands? Like all the brands, dude. Like every single brand. I would walk by the liquor aisle because the aisle was in the back. I would be in the back in the cold area when my dad was loading up the Miller Lights, the Bud Lights, all that shit. Like I know all these brands, but I don't drink. Like I don't like drinking. So I guess when you grow up around that much liquor, you just don't care about it anymore. But yeah, I feel like it has to be in my blood. 50% margins. Yeah, dude, I learned about the concept of margins as well. My dad, I remember he was telling me the math on it. He would sell chips for 50 cents for like a bag of chips. Now it's like $1.50 because inflation. This was like 2009, 2010. I remember he said he would buy them wholesale for 47 cents, 48 cents. So he would make like a 2-cent margin on the chips. But he's not trying to make money on the chips. He's trying to make money on the liquor. The liquor has a better margin, but the chips, if you're there, you might as well buy some chips if you're getting some liquor, right? Or just buy it with other candy or whatever. So I remember when he was telling me, and as a kid, I was like, you're buying it for 48 cents, you're selling for 50 cents, you're making 2 cents. Like that's not a lot, but it wasn't about the margin on the chips. It was about it being a pseudo loss leader to get more people into the store. Because if you're going to buy liquor and you want a bag of chips, you shouldn't have to go to like Walgreens or CVS to get your chips if you're coming to the Boyden Pantry to get your liquor. So I started learning about like those basic elements of business at a very young age. And I think that's also what made me excited to like potentially, be an entrepreneur and like go out and start my own shit when I was 18. My wife and I have discussed opening a liquor store recently. See, I don't know all the unit economics around liquor. I don't know if the margins are incredible. I also, dude, my dad had it. My dad had 2 liquor stores. One he had in a really bad area. and he got robbed way too much. So we had to leave. And then the liquor store we had in Maplewood, I'll never forget, dude. My grandfather, he would control the shop on like Sundays, and my dad would get like a break. Got held up at gunpoint. Someone came in with the gun. They said, "Give me the money." And so like, and I think, and we lost some big money that day. So liquor store business in a bad area, which is what produces good revenue, Palantir at 2807, is not the best, because there's always a risk that, you know, you get nuked, right? Someone comes in and fucks it up. So that's another big risk to liquor stores. Like, I don't think people are gonna hold up a Dunkin' Donuts, even if it's in a bad area. But a liquor store, you know, you're gonna get held up for cigarettes, all this shit. Like, there's a lot of stuff people fight for. So maybe we do it in a better area, but there's a variety of risks. I just think it would be cool to do it. And, you know, if we actually start, if I build up a decent position, we don't even have to do it in cash. We can get a loan again. Like one of the things that Derek was telling me about is, like, let's say Figure IPOs, right? My 25,000, let's say it turns into like 2.5 million or something with Figure IPOs at like $200-300 billion market cap. We're just dreaming right now, but let's just say it happens, right? I don't need to sell that Figure stock. I can get a margin loan against it. The bank, if they think Figure is worth, you know, $300-400 billion, they can say, all right, Amit, we're gonna, you know, collateralize your 3 million Figure in Figure equity. We're gonna give you $1 million of line of credit. You can go do what you want with it. I don't have to sell stock. But this is what a lot of wealthy people do. I know a lot of people in the chat probably do this. When you have a lot of money, you can take loans against it. You can collateralize it. You never have to sell your assets to actually have cash to buy something. And then you pay off the loan as you start a new business and as you get income from the business to appreciate against the collateralized margin against your assets. So one of the game plans is, if we can, you know, establish some decent equity, potentially in something like Figure, if that works out, then we can use that money to start a liquor store, which I think you would need at least like $700-800 grand to like really start it and make it work effectively. So it's going to take some money, but that is a dream that I have. No stresses. Our local liquor store is great. They are super friendly and always have someone that helps you carry it out to the car and find the stuff you need. Yeah, that's another problem with my dad's liquor store. My dad was super friendly. My grandpa wasn't, and my grandpa didn't speak English. So that's another thing that ruined the relationship of the store, because my grandpa would like argue at the customers in Hindi, and like they have no idea what he's saying. My grandpa, like at that point, he didn't have dementia, but he was getting to the point where, you know, his brain was getting there. So he would just say random shit. And then the customers would get annoyed because he's saying random shit. And they're like one time, I was with him. My dad was out. I was with my grandpa. And one of the guys comes in, he asks for a cigarette, and then he asks for a light, you know, to light up the fucking cigarette, right? And my dad would have been like, sure. And he would take out a lighter, even though you're supposed to pay for a lighter, and he would just light the guy's cigarette. My grandpa was like, no, you have to buy it. And I'm like, oh boy, this is bad. Because the guy's like, dude, just let me get a light on the cigarette. And my grandpa's like, no, you have to buy it. And so then the dude jumps the counter. He jumps over the counter and he looks like he's about to punch me. And I'm like, run to the guy. I'm like, yo, I got you. Here, take the lighter. And at the same time, my grandpa's yelling at this guy. My grandpa was ready to fight, dude. My grandpa was like 75. He was ready to fight this guy over a fucking lighter. You know, this is why I think our liquor business failed, because we had management like my grandpa that just like, he was not supposed to be working at that age, dude. He was too stubborn to, you know, like, and I love my grandpa, but it was not the right personality to run a liquor business. Like you give the guy a lighter, you know, it's like, it's not that big of a deal. So they didn't understand, my grandpa didn't understand customer satisfaction as much as profit margins. And that's where greed comes in, right? And that ruins relationships. And then people are not going to go back to that store. They're going to go to a different store because they'll get a lighter from someone, and that'll mess things up. So I saw a lot of, when I was young, dude, this was all happening from the years of 2008 to from 2006 to 2013-ish. Those 7 years, I would come back after school. I would stay at the liquor store for like 7 hours a day until my mom picked me up. And I learned a lot about business. Will you sell Palantir shares at your store? We should do that, dude. We should. They should, you know, they have ATMs where you can like buy Bitcoin. They should have like little brokerage machines, dude. That's a cool idea, having a brokerage machine to buy shares of stock. Technically that wouldn't work though, because you gotta like, I guess you have to sign up with your brokerage and stuff. So I don't know if that would work, but that would be funny. But in general, yeah, had a lot of experience with the business at a young age. And so I think it would only be right to take what I'm doing in the current era, which is a creative job. I mean, dude, I got paid $1,200 last month from Twitter to tweet. Like, even when I think about that, like, and I'm just like, dude, like, you know, $1,200 is a decent amount of money. Now, obviously, I do think it is undervaluing the work I put in on Twitter, because if you just look at the time compared to the money, it's like, dude, it's less than $1 an hour. Like, it's not like you're getting paid a lot of money, but the point is they're paying you something for being creative. How amazing it is in this economy that you can be creative and actually get paid for your creativity. How crazy is that? How crazy is that? So I always think, like, if I can make some money off the creative part of my life, and including the stock market, I think you have to be creative to be an investor as well, and put it back into a business that I grew up in, even though I wasn't like operating the business, even though many times I was running lotto tickets for people. I was running the cashier, all that stuff. I think that would be a cool story. Palantir 2820, Rocket Lab at 478, PayPal 64, Enovix 1147, Enphase 107, SoFi at 671. I would give free matches to people. Yes, I would give free matches. I would definitely do that. Open a strip club. That's a fun idea. That's you guys know I've never been to a strip club. I've never been to one. I know, never been to one. I think I was gonna go to one in Vegas like a year ago, but we never ended up going. Never been to a strip club. I keep asking Palantir to sell the Carp White shirt on the merch store. Maybe someday. See, that would be cool. I think so many people would buy the Carp White shirt, dude. That would be so funny. Now my grandpa just collects premiums. Yeah, so this is my grandpa on my dad's side who ran the liquor store. That grandpa passed away in December 2022, the one who ran the liquor store with me. And the biggest memory I had with him is that we played cards every day after school, dude, for 4 years. Like, he taught me how to play cards. It's an Indian game called Seep. I don't know if a lot of people know it. But I learned it when I went to India in 2008. I came back in 2009, and then every day after school for like literally 4 hours, dude. And my dad liked it because I would keep my grandpa busy, because like a lot of times my dad didn't want my grandpa at the top of the store because he would be arguing with customers. So he would be like, just go to the back. And I would go to the back and I would play cards for hours. And it was so funny, dude. I remember this one time I acted as if I was losing. Like, I was supposed to put down a card that would have had me like basically win the game. And I put down a separate card, and my grandpa was shocked. He was like, holy crap, I have a chance to come back. So then he puts down another card, and then I put down the card that really wins me the game. And I remember he was like, this motherfucker, he said it in Hindi. He's like, this motherfucker just played. It was the funniest thing ever, dude. I was like 10 years old at the time. It was cool, dude. So like, those are the memories I have in the liquor store. And I would want to start another one. I really would want to start another one. Strip club, liquor store, brokerage. That's got to be $1 billion business, dude. It's so crazy though, because when I look at Palantir and I'm analyzing the operational efficiencies of AI-powered supply chains, I'm like, dude, I come from buying chips at 48 cents wholesale, selling them for 50 cents. 2 cents is your profit. Boom. That's the business. Like, that's the background I come from. That's the background my dad comes from. So whenever I'm explaining him all this tech shit, like I was trying to explain him Bitcoin the other day. He was like, so who's the CEO of Bitcoin? I was like, there is no CEO. He's like, that's not true. I was like, Dad, there's no CEO. He's like, no, there has to be like the company. Who runs the company Bitcoin? I'm like, Dad, it's not really a company. He couldn't get it. He didn't get it. He didn't understand it. He's like, this is nonsense. Even though he invested, he said, I bought $200 of Bitcoin. I was like, what? He's like, yeah, I was going up. I just bought $200. I was like, oh my God. But it's so crazy analyzing like Palantir, this abstract, software company, versus a liquor store. And I think it would be really cool in my mid-30s to go from analyzing really high-level tech companies. I would still obviously be doing stock market stuff, but also operating my own cash flow business. That would be really cool. I would like that. Like, I think that would be a cool, like, that's like a goal for my mid-30s, dude. Like, I really want to do. I think that would be a fun way to use what I'm doing here to go back to the basics. Meet Kevin sold everything. Yeah, I got his notification yesterday. He sold out of pretty much everything. He's like pretty much cash at this point. Maybe the right move. Maybe he sold Palantir, I think at like 26 or something. He still has some Robinhood. He bought 1,000 calls for Robinhood for $20 August 16th. Don't follow him into that, please. Is a $20 strike for August 16th. Someone texted me he bought 1,000 calls. He's just gambling, day trading on that. That's a little bit. Those, I don't know if Robinhood does well, so like, I think they will, but that's still too much of a gamble for me. But he's just day trading at this point, and he's mainly cash in the PP ETF. When we see Meet Kevin come back into the markets, it'll be interesting. It'll be interesting because right now he's like, last night on Twitter, he was not happy with Bank of Japan. I was over the moon. I was fucking looking up how to say Japanese shit on ChatGPT. He was saying, oh, this is horrible, blah, blah, blah. I mean, let's go to his tweets. What was he saying? He was upset about this because he wanted the markets to crash. But but that's not the case. He said, this proves the stock market is becoming very illiquid, scary. Imagine when there's selling pressure and lack of intervention, like during the onset of a recession while inflation is still not low enough for Jerome Powell. Okay, so I get his argument. So he's basically saying, hey, this is scary because markets are so illiquid that we need some level of intervention to keep things afloat. I get it. The problem, my retort to meet Kevin's argument about Japan, is that Japan should have never intervened in the first place. They should have never raised rates in the first place. If you believe the raising of the rates was political and it was not based on anything like solving their debt to GDP ratio, which raising rates has zero impact, it has a negative impact on that, then this was all politics in the first place. So they're just reversing what they shouldn't have done 3 weeks ago. So I don't think it's they're intervening. I think they're just like realizing, it's like they have post-nut clarity. That's what they have. That like they F the market. They realize, holy crap, like maybe we came inside. We need to get a fucking plan B. And they realize this is ridiculous. We need to keep our rates where they are. We don't need to raise rates anymore. So I think that's what Japan had. And as a result, Palantir right here, 28.30. That's why we're recovering right now. So I disagree that it was purely based on intervention. What else do we have? So 28.25. Where's Hood? Hood's still at 17.45. Crowdstrike 2.35. Let's see what the suits are talking about. What are the suits talking about? Who's this guy? Do they have a SWAT? No, they don't have a SWAT. They have talking about general mode. Oh, here we go. This is what I was looking for. Okay, let's look at this. So this is more CrowdStrike stuff that I wanted to look at, especially in the context of what Microsoft is saying. So let's look at this right here. Let's take a look at this. Here we go.
Back on Delta's claims that Microsoft and CrowdStrike should be held liable for the IT outage that caused Delta to cancel flights for several days in a row. Pushing back on comments Delta CEO Ed Bastian said on our own air last week that the outage is going to cost the airline about $500 million. Microsoft's attorney sent a letter to Delta attorneys saying, in part, Delta declined assistance from Microsoft to fix its computer systems. Also, that Microsoft CEO Satya Nadella emailed Bastian and received no response. Also alleging Delta is just using outdated IT systems, and the extended outage could be because of other vendors besides Microsoft and CrowdStrike. Plus, Microsoft pointed out that United and American Airlines, they were able to get up and running days before Delta could. Now, these are very similar arguments that we heard from CrowdStrike's attorneys over the weekend in response to Delta's allegations. And Delta, by the way, yesterday did not address most of what Microsoft and CrowdStrike have said. Instead, yesterday, a spokesperson told us the airline does spend billions each year on its IT operations. And guys, this is not over yet. Likely not the last legal threat for CrowdStrike or Microsoft, but because it's Delta, because so many people are impacted, it is the most prominent, guys.
And Steve, is the expectation that CrowdStrike and maybe Microsoft will have to fight these things out, one by one, customer by customer, or is there going to be some kind of, more global approach to settling all this?
Yeah, potentially. So yesterday, CrowdStrike also put out, they've kind of figured out more about what caused this. That's kind of the first step. But I'll also note that attorney from CrowdStrike, his letter over the weekend also said that because of the way these contracts are written, that CrowdStrike is only liable for single-digit millions in payments, whereas we have Delta out here asking for $500 million, Mike.
Steve, thank you. Steve Kovac. That's an interesting battle to keep an eye on between Delta and Microsoft and CrowdStrike. Let's come back to our markets for a moment here. Of course, we see the S&P up 1.5%, NASDAQ up 1.8%. Mike, let me just come to you in the brief time we have. Sort of anything you're going to be focused on during the rest of the trading day?
It's mostly about whether, this market seems capped right here. I mentioned we were above yesterday's highs, basically went right back to that level. We're kind of fighting it out. So to me, we're in the sort of tactical zone of is it safe to add back risk, because there has been a real, I think, a bit of a purge of positioning coming into this week. In fact, you also saw some data that Monday was one of the most active days for people shuffling around their 401k investments. So there clearly was a lot of attention and money in motion on Monday. So people are wondering if it's, safe to normalize what they were positioned as,
So Delta, CrowdStrike, that fiasco still going on. CrowdStrike not going out without a fight. CrowdStrike right here up 1.2%. Wow, CrowdStrike was at 242, now they're at 234. So we're seeing a little bit Palantir might be down. Palantir is down slightly, 28.20 from 28.32. Still up 6% on the day, which is great. Enphase up 6%. And the broader S&P doing okay, 529. Shout out to Chad in the chat. Everyone should use their CrowdStrike gift card to order Wendy's and send Ileano a picture. Dude, that's hilarious. That's hilarious. I got to show you guys this picture that I'm about to tweet out that I just got as well on Palantir. So Palantir has put an entire commercial or advertisement with Wendy's. Look at that. From farm to frosty, Palantir is bringing AI to the supply chain. I think this is Wall Street Journal, the newspaper. Might be wrong. It's one of the big newspapers. It's a big deal, dude. People on Twitter are freaking out about it. People on Twitter are freaking out. People like, and by the way, we knew about Wendy's for a while. I mean, like Wendy's had a workshop at AIPCon, so it's not like it's literally new, but I think a lot of people didn't know. And so it's big to them because Wendy's is a very premier name. Yeah, dude, I'm just looking at the comments right now. People like it. Also, Wendy's tends to engage. Their social media is great. They tend to roast a lot of times. So they haven't engaged with this post yet, I don't think. Ileana said, "Hey babe, we're doing Wendy's for dinner tonight." And that's when I said, "Look, if she lets me take her to Wendy's and she asks for no mayo on her burger, I'm marrying her right then and there." Is it a red flag if you take a girl to Wendy's on the first date? Think before you say yes, because I know most people will say yes. But if she's down to do Wendy's on a first date, I don't know, dude. I mean, she's a keeper, bro. She's a keeper. I know you guys are saying yes immediately, but just think about it for a second. Like, you want to find a keeper, right? I mean, does she really need Cheesecake Factory? Really? You need Cheesecake Factory? Like, I'll get you 2 $5 biggie bags. We don't have to get one. We could, it is cheap. It is really cheap. I'm not gonna lie. It's cheap. Is it a red flag though? It is cheap. It is indeed cheap. My company does Wendy's Twitter. Okay, so I'm assuming Eeyore, you work with a PR company or something. The Wendy's Twitter is good, dude. The Wendy's Twitter, I'm sure you guys have seen some of their tweets before. They go viral all the time. They're just good. Like, let's go to their Twitter. Let's see their most recent tweets. Unhappy hour. Get a $1 honey buddy with purchase in the app Monday mornings is literally the least we could do. Hope that's enough. My saucy nugs get such a good block from the table. They do Yurchenko double pike into my mouth. I don't know what that means, dude, but I'm assuming, look at the engagement. People obviously think that's funny. So there you go. Happy hours are overrated. Come to Unhappy Hour tomorrow for a $1 honey bud. Oh, look at this. That's cute. We got free fries every Friday in the app all year long. After McDonald's said they're giving free fries on National Friday. See, you need this type of stuff. See, that one did well. That tweet, like, this is the type of social media stuff you need as a brand. And that's how you keep continuing to win and stay relevant for social media. I went to Shake Shack for my first date with my girlfriend. All right, so for all the people that said Wendy's was too cheap, is Shake Shack cheap? I think that's not cheap for a first date. I think the average Shake Shack meal is like $17. Unless you think a date needs to be $50 or something for everybody, right? So $100. But I don't think Shake Shack is crazy. It's a red flag if she's insulted by Wendy's. Better if she says buy Palantir with the money you saved. Yeah, that's true. Better if she says buy Palantir instead. Dude, I feel like she's gonna have to love Palantir as much as me, or at least know about Palantir. Like, if I start talking about Palantir, she can't be like, "Can you stop talking about that?" She needs to be like, "Oh wow, so they're working with Wendy's supply." Like, now, granted, I'm also on record saying I kind of want my wife to not give a shit about the stock market, so that we never have to talk about. But like, look, if I had a wife, right, and we were living together yesterday, and Bank of Japan just said that they're not going to cut rates, there is no way I would be able to hone in on my excitement to myself. I would have to be like, "Babe, Japan just fucking saved the markets." Like, and she has to at least understand how to respond to that. She doesn't have to like care about it, but like, it's if we could have a friendly back and forth on that, because I got to tell somebody, dude. Like, and I know I have Twitter, I can tell Twitter, but like, if you're right next to me, dude, I got to tell you, the Bank of Japan just fucking saved the markets. Like, there's no way I can hold that inside me. So I hope to an extent she cares, but I also hope she doesn't care, because I don't want to talk about stocks with my wife, dude. If I'm going to be doing this for a living, I want to talk about something else. when we're done with the workday. My friend, shout out to Davis in the chat. My friend Davis, you guys might know him. He recently started going on some dates with this girl, and she's like, Davis follows the markets, but he mainly just likes my content. He doesn't really care about he's like in med school. He doesn't give a shit that much about the markets, but he follows Palantir, all that stuff. So he just watches my content and he just like, follows what I talk about. So he's like, Amit, she wants me to like teach her how to invest. And so we were on the phone yesterday. And I was just like, all right, so she wants to go on a date with you, but she specifically wants, because she's like a real estate girl, so she wants to learn about the stock market. He was like, I have no idea what to talk about. He's like, I don't even know how to start the conversation. I was like, all right, here's what you're going to do. Okay. I went into coaching mode. I said, you're not going to talk about Palantir. You're not going to talk about ontology. You're not going to talk about dividend yields. You're not talking about selling options. You're going to be like, imagine if you could own a part of Apple. Imagine if you own a part of Google. Imagine if you shared in the wealth creation of what Elon Musk is doing. So I was like, the way you got to approach it for someone, obviously she's money minded. She's a realtor, so she cares about money. It's not like she doesn't care about money, but she just doesn't know anything about the stock market. But if you have a money focused brain, then the best way I think to get interested in the stock market, that's what got me appealed. It's like, oh, I can own some of Apple, like not just use their phone. I can actually own a part. Like that gets me excited. And so he used that strategy. Worked flawlessly, sent me a picture of them holding hands at the end of the night. And so, your boy did good. And now they're going on a second date. But I think that's how you get people interested in the market, much less a girl who doesn't care too much about the market, is you get them to feel the ownership value of owning a company, a brand, like owning a part of Wendy's, even if the stock sucks. Like that's cool as a thought concept. And I think that's what gets people at least interested into the economy or into the market as well. She needs to just act like she cares. That's what my fiance does, at least. Yeah, that's all I'm asking. Amit is almost as picky with women as he is with food. Dude, I think I'm more picky with food at this point in life. Dude, I don't know. There's certain things it's hard for me to eat, dude. I don't know. It's like, it's weird. Oh, we got a meme from Garcia. Garcia's my meme guy. Yeah, look at this. We're talking about dating with stocks, right? So yeah, long story short, they're using really advanced computer programs that can learn and make decisions on their own. This will help Wendy save money and work more efficiently. Oh my God, dude. This is hilarious, bro. Dude, this is awesome. Imagine trying to tell like a cute Wendy's cashier about how the supply chain of her restaurant is being powered. And she's like, dude, I don't care. I'm just trying to like take your order and move on. This is hilarious. It is great. Garcia is the best with the memes, bro. Garcia is the best with the memes. Imagine if you could own a part of a Mitts liquor store. Dude, that'd be so cool. I really do want to open a liquor store, bro. I really do. I really, really do. I think it would be so cool. And there's a lot of liquor stores in New Jersey, so it's a competitive business. Like New Jersey, I let me see. Is there a stat for that? All right, let's use ChatGPT. See, this is where my mind goes. As soon as I think I have a question, I'm like, all right, let's see if AI actually has a real use case. It can answer this immediately. So let's go to this. Okay, let's go to ChatGPT. Here's my question. What state in the United States has the most liquor stores? And this is what I do, although it has no impact on it. I use caps lock because I feel like the AI recognizes my emotions if I'm in caps lock, even though it doesn't. Don't lie to me. Hopefully that helps. I type in caps lock all the time. It's like ChatGPT doesn't care about my caps lock, but I do it all the time. Okay, so it's California. Okay, California. Name me the top 5 states. See, I do caps lock again and see. Okay, California makes sense, but it's California. Like, let's see what else we have besides California. New Jersey's got to be there, bro. California, Texas, Florida, New York. Damn, we missed it. Pennsylvania's the next one. Okay, give me top 10. Give me top 10. We got to make the top 10. There's no way New Jersey's not in the top 10, bro. There's no way. Wow, we didn't make the top 10. That's wow. All right, California makes sense. That's number 1. Obviously, it's the biggest. Georgia's number 10. I would think New Jersey, dude, there's a liquor store on every other corner in New Jersey, but New Jersey, there's a lot of liquor. We do a lot of liquor in New Jersey. LLMs actually do understand case? Really? Dude, I yell at ChatGPT daily. And like sometimes like I asked it to summarize something and it does it in a weird way. And like, don't be robotic, right? Like summarize it in a more realistic way. And so I'll type in don't be robotic. But I never think that makes a difference. I'm just like angrily typing into the LLM trying to get a good result. Let me ask ChatGPT. Let me see. Maybe hey, if I type, you see how I type hey? Like I literally treat it as a friend. Hey, if I type in caps locks, does it make a difference in how you answer me? Let's see. Okay, so ChatGPT says no, but I'm sure in future updates and things of that nature, they're still understanding different use cases. Think about how it write things back in proper case. Well, that's true. She must hate you. She must hate me so much. Okay, could an LLM interpret text submitted by the user in caps lock as a way to impact how they answer a query in a more serious way because of the caps lock? An LLM could be designed to interpret text submitted by a user in caps lock as an indicator of urgency, emphasis, or emotional intensity. Yep, there you go. That makes sense. This interpretation might lead to the LLM to respond in a manner that reflects a higher level of seriousness. See, I see this when I type in caps, which is why I keep doing it, but I feel like it doesn't have an impact. Like I feel like it because I was told originally, like it doesn't really matter. But when I say like don't be robotic or like don't use too many adjectives, I see the difference. Now, my question is the caps lock really the thing that's making the difference? For example, if a user types help me with this problem now in caps, the LLM might prioritize this request and respond with more urgency compared with a normal type query. Dude, and here's the amazing thing about this. This is only going to get better and better and better and better and better. This is like what, version 4.0 of ChatGPT with caps lock. This, like, imagine 5 years from now where I'm talking to ChatGPT and like the inflection and intonation of my voice is a little bit more serious or a little bit more relaxed, like how the LLM is able to really navigate the issues I have. Or if I'm like, hey, I really have this meeting at 6:30, like cancel my schedule. 6:30 is I need to have this meeting. Don't forget to send 5 alarm clocks to me because I need to wake up by 6 o'clock. Like if it can sense that urgency, I feel like it can do really well. Grok sucks. I used Grok yesterday. It officially sucks. I'm sorry. Grok sucks. It's not good. It's not good, dude. It's not. It tries to filter through tweets to give you information. It's not better than ChatGPT, dude. I think 9.9 out of 10 people would say ChatGPT is better than Grok. I try using it, dude. It's just like it first of all, it's slower than ChatGPT. Like it's just not as fast. Palantir 28, or sorry, PP, beat Kevin's ETF, is at 28. Palantir is at 28.30. So up 6.5% of the day, daily high for Palantir. But it also doesn't contextualize the answers in a way that actually responds specifically. It tries to like filter through tweets and like show you people's tweets as content, but it's just not good. It's just not good to me. I still think GPT is like the best version of it. Tweets will give you information. All right, just not anything trustworthy. Yeah, that's the other thing. And I'm not saying ChatGPT is the most trustworthy either, but ChatGPT is better at summarizing some of this stuff. But I yell at it every day, dude. I yell at it every day. You can literally test it yourself instead of asking, okay, let's do a test. Let's do a test here. So, let's see. Hi, I need you to tell, what's the use case? I need you, what's a sentence where caps lock, we would obviously see a difference. I need you to tell me about the carry yen trade in one paragraph. Okay. So we'll get carry yen trade. Okay, there you go. One paragraph. Okay. Please tell me right now, all caps, about the carry yen trade. All right, so let's see real time if it does the difference. So I said, hey, tell me about the carry yen trade, normal, blah, 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 blah. Here's caps. Let's see. Please tell me about right now. Somewhat different, somewhat not. Not really too different. It definitely didn't type back in caps. Can you respond to me with the same urgency I am showing right now? Let's see what it says. Let's see what it says. Yeah, look at that. We got it. We got it to do caps lock. Look at that. Look at that. We at least got it. The carry yen trade is a caps lock, high risk financial strategy where investors caps lock borrow Japanese yen, caps lock at low interest rates. That's not too bad, dude. That's pretty cool. That's pretty cool. And I didn't say, can you respond? I didn't say, can you respond with the same urgency I am showing right now with caps lock? I didn't even mention caps lock. I just typed it in caps lock and it showed caps lock based on, I think the keyword was urgency. And in order for ChatGPT to interpret urgency, it showed caps lock. And if I didn't do this with caps lock, maybe it wouldn't have showed caps lock on high risk financial strategy, low interest rates, etc. That's kind of cool, right? That's kind of cool. Chat says you are hitting ChatGPT, which is an application within an LLM. It's not the LLM endpoint, which is just predicting tokens. They could have things in your app layer to manage your requests. Yeah, and that's why I think prompting ChatGPT like I did right now, like pseudo prompting it, is where I get the answer I wanted. But obviously LLMs can likely be programmed to interact with text, whether it's caps lock or not. ChatGPT is just one of the application layers on top of it. You are welcome for the lesson of the day, Amit. Thank you, Chad. Thank you for the lesson of the day. Chad is someone that I think people need to make sure you're following on Twitter if you're not following, because I have a notification now every day at 1:30 to stalk his tweets. Now you might be thinking, hey, Amit, why are you stalking Chad's tweets at 1:30? Well, that's because I need content to retweet for the Daily Palantir account. So because I need content to retweet, I stalk his Twitter. And when I stalk his replies, dude, some of the shit I find in his replies, this man loves to roast. I'll just say about that. Here's his Twitter right here. He enjoys roasting. And I find a new Dan Ives clip when I'm stalking his replies. This is why I stalk Chad on Twitter. All right, here you go. We got Dan Ives talking a bit more about AI. I think this is not just Palantir. He's talking about Tesla as well. But this is Dan Ives on a bunch of AI stuff. So let's listen to this.
Yeah, look, it's a great point. I mean, look, I'm ironically here in Tokyo.
Dan Ives goes to Japan. Japan eases up with raising rates. Coincidence or not?
The yen carry trade changed the AI revolution? No. In other words, like my point is, we look at what's happening from monetization in a once in a 40-year cycle. This is unique. And that's why for big tech, these are the buying opportunities. That's how we've always navigated these global sort of, white knuckle moments. You buy high quality, large cap tech. And that's what we were telling our investors the last 24, 48 hours.
And how are they receiving that, Dan? I'm just curious, right? Because we do have this turmoil that's been hitting the market, volatility hitting the market, whether it's because of the carry trade or because in some cases there are some real concerns about the pace of economic growth here reflected by the uptick in the unemployment rate, et cetera. So are they reassured or is there still a lot of concern out there?
Julie, I'd say probably like my conversations over the last week, especially over the weekend and going into yesterday, probably some of the nervous I've seen investors since COVID lows in terms of March 2020.
Which is good, dude. If we have that much fear and there's no global pandemic, that really might be peak fear, hopefully, and equities can rebound from that.
But then you look at the fundamentals. I mean, we just came through a tech earnings season that was actually pretty robust relative to, I think, big tech, cloud, and AI. Look at Palantir last night, just another, monster performance. So we're kind of looking at what do the fundamentals look like here in Asia. We don't see any issues in terms of demand, and I think we hear this from NVIDIA in the next few weeks. These are the opportunities. If you're a believer like we are, and this is not ending the tech bull market. But again, I was getting nervous, hearing from a lot of bears. I haven't heard from them in 18 months. It was good to make sure that they were good hearing from them the last week.
Dan, let's get to some other names I know you cover. Uber is another one.
Okay, cool. So that's what Dan had to say about AI. Makes sense. If that was peak fear, it makes a lot of sense. Wade McDonald says, this is my first time watching and the content is fun and educational. Only downside is the hate on mayo. It's in so many delicious things. Thank you, Wade, for being here. Hope you enjoy. We do a market open stream and close every day. Guys, the streams have been long in the morning, dude. We're on 3 hours right now. Usually we do 90 minutes. And we are accelerating every single day. It's not because there's like that much new news. I don't know. We just keep streaming every day. So I think, I don't want to say it's going to be 3 hours every day, but I think we're heading on 2 hours easily every single day. And so I guess that's the expansion. If you were here in the early days, it was 9:20 to 10. It was 40 minutes, which now I think about how the hell did I talk about the market in 40 minutes? Like there's just like not enough time. So then we went to 8:45 and then, gradually started expanding it from 8:45 to 10 to 8:45 to 10:30. Now we're at 11. It's 12 today. But yeah, we're going to keep expanding, and I'm happy you're continuing to stay, even though we were hating on Mayo. So a couple of headlines right now. NVIDIA just announced Q2 earnings Wednesday, August 28th. So August 28th, the entire world will be watching for NVIDIA to save the markets. And then here's another thing. The lady who came up with the SOM rule, remember that recession rule? Claudia Sahm, she just did an op-ed on Bloomberg. Look at the headline on this, dude. Look at the headline on this. My recession rule was meant to be broken. My recession rule was meant to be broken. Look at that. Meet Kevin said, call me jaded, but the person who came up with the SOM rule predictor of recession now says a rule was meant to be broken. I'm sure this has nothing to do with their role as an investment advisor. No concerns whatsoever about outflows from fearful clients about her rule. I think Meet Kevin's being salty here. I think he's being salty. Dude. I don't know. I mean, look, maybe there's an argument for why she's being a little hesitant about this rule. But I think Meet Kevin's upset that Japan reversed. I think he's upset that now Claudia Sahm, which was the whole thesis for this recession, is now saying, actually, my rule is full of shit. It's broken. Which, by the way, I haven't read the article. Of course it's full of shit, not because the rule sucks, but because we had a global pandemic, we printed trillions of dollars, and then we raised rates to 5.5%. If the yield curves inverting is not enough to cause some massive recession, which should have happened a year ago, why do we think the SOM rule is going to now be this thing that breaks the market, especially given how the market has been so volatile over the past 2 years and not paying attention to all these different indicators? So that's why it's full of shit. Not because her rule is bad, but because the market is crazy right now. And I don't think you can use any historical precedents to justify one or two things happening. But that's pretty cool, right? She comes out, she says, forget that rule. That rule is kind of stupid. Bull market. Let's keep going. Dude, everyone's trying to keep this bull market alive. Everyone, literally, like everyone has their gains. And I think most people are like, all right, if we get to 2025, January 1st, I'm selling. So I have to avoid the taxes in 2024. I can take my profits. Dude, I would love to take my profits January 1st, 2025 and sit in cash for like 3 months. I'd probably be getting 4% from Robinhood at that point if rates go down 75 basis points. I would love to get 4% for 3 months and just let things play out, just see things. Even if I'm missing out on some gains, obviously the Palantir would stay Palantir, but the options and everything else, I would just keep that in cash, have some more clarity on where the market's going, and I would be relaxed. But we got to get through 2024 to get there. We got to get through 2024. And I think all of us are just trying to like keep this market alive before shit hits the fan, potentially in 2025. I don't think we have to have a recession in 2025, but things are boiling up. I mean, it's getting to the point where if Jerome nails this soft landing and he keeps it a soft landing for 3 years, dude, greatest Fed chair of all time. Like, there's no debate. Greatest Fed chair of all time. It's going to be really hard, though. Even just getting through the next 5 months is going to be really hard. So we got to see if JPOW can do it. Robin at 1734, Palantir falling down a little bit, 2812. S&P is now coming down. There's your red candle right there. So typical on time, we're getting a red candle, a little bit of reversal throughout the entire market. We'll see if that changes at 3 p.m. or 2:45-ish. 526 right now on the S&P. Chris says, Amit, Chad, can you do a demo live like this? I'm interested in a demo. Yeah, Chad, if you're still here, dude, we have to do that demo. That demo of how you can build and create an application that actually responds to caps lock or not. I feel like AIP would be an amazing use case, building it on top of AIP and like showing people the power of it, but also showing how you can build different interpretive LLM functions via AIP. That would be something I think a lot of people would get interested in. Because, dude, that example on ChatGPT, that's cool, right? Like you're really navigating with AI. I never mentioned caps lock. I just showed caps lock. I said the word urgency, and then boom, you get certain words in this paragraph that are more important than other words via caps lock. So it was able to interpret that that's how it should respond. And this is just like the 3rd or 4th version of ChatGPT, dude. When it's on the 10th version, I can't imagine what these things are going to do. Like this shit's going to get crazy. The only concern now is like, is the use cases going to be so vast that people are going to be interacting with their iPhone every day with it, that people are going to be actually paying for ChatGPT? And The more I use it, the more I think so. But I still have to remind myself, most people, like my sister doesn't know what an LLM is. She doesn't care. And until my sister, like the average person, cares about this shit, it's still going to be hard to make them super, super, super mainstream. And hopefully Apple helps with that. We're bringing it to the consumers. Whoever says AI is fake is just stupid at this point. Well, I don't think AI is fake. I think there's a legitimate argument that AI's use cases are not, crazy yet on the consumer side. On the enterprise, we're seeing this with Wendys and their supply chain. There's like really important use cases. That's why I think Palantir is the obvious bet over the consumer AI plays. But I think there is a question of like how much are consumers going to engage with this every day? And I think if Apple embeds it into Siri, I think I'm going to be using Siri a lot more. And I think it's going to be like I asked Siri yesterday, hey, remind me something. I asked a question after I said, remind me. I acted like it was an LLM, but it wasn't. And it just like said searching Safari. And I was like, oh, this is horrible. So like, I do think the use cases will proliferate. But you need a company like Apple to really bring that into the mainstream. Do you think NVIDIA's report's going to be good? I think NVIDIA's going to be phenomenal. The street's expecting like 26 billion. I think they're probably going to put up the street's expecting 28. I think they're going to put up 30 billion. I think they're going to forward guide for full year 2025. Very strong. Even if it's not 282% top line, it's still going to be, I think, at least 50%, if not 75%. Loop Capital thinks NVIDIA is going to do 175 billion in fiscal year 2026 in revenue. If that's the case, this thing is very, very cheap. However, that's the most aggressive estimate. I don't know if they do 175 billion by 2026. Most estimates are they do about 130, 140 billion. But still, like, if they put up the numbers and it's not slowing down and we have 100 trillion parameter LLMs, you're going to need more GPUs. Like, I feel like NVIDIA is the winner. I feel like NVIDIA is still the winner. Market just took a downturn. Yeah, we got some red candles. So let's see if we can maintain the green we have right now. But we did just go red. PayPal up 2%. Novix up 5%. SoFi up 3%. Crowdstrike lost its gains. It was at 242, now 233. And then Palantir still up 5%, dude. Even if we fall another percent and we're up 3 or 4% on the day, that's a great day for Palantir. And this Wendys partnership is going pretty viral. Like I'm getting a ton of messages from it already. It seems like people really care about this deal. And we needed a blockbuster deal, dude. The last blockbuster deal we had for Palantir, let me go to their IR right now. The last blockbuster deal we had for Palantir, let's look at it together. It wasn't the energy deal. Tampa General was cool, but the extension was cool, but it wasn't like a blockbuster deal. Eaton, we already knew about them. Oracle. Yeah, Oracle. Last blockbuster deal was Oracle. And Oracle is not a brand like Wendys. Oracle is, I think, a much more sophisticated, better brand, but it's still enterprise cloud data solutions. It's not chicken nuggets, Everyone can relate to chicken nuggets. So I think it's the biggest deal of the year. Yeah, look at that. It's the biggest deal of the year. The other one was Titan, but that's more government. And then Bapco Energies, that was really cool, but that's much less known. And then the other big one was Coles in Australia. So Wendys was the deal. Wendys was the really big deal that we had. Do we think a version of Moore's Law starts applying to LLM parameter count? I would imagine yes. I feel like I'm not educated enough on Moore's Law to say definitively yes, but we've seen it applied in a variety of other areas of tech. I mean, this was Kathy's entire thesis on electric vehicles back in 2016. If you read her white papers on why she thought Tesla could be $4,000 at the time. So I would imagine there's something similar here when it comes to LLM parameter count, but I could be wrong. But if there is, then it's going to be exponential. It's going to continue to be exponential. Wait, is this still live? Yes, this is still live. Wow, Amit ain't tired yet. Dude, I don't get tired from this stuff. I mean, we're probably going to close in like 5 minutes, but this is not tiring per se. And maybe it's because I'm an attention whore and I like hearing myself talk. When I learned to hear myself talk, see, now I'm going to get into another story about this. This is the issue. This is the problem. When I die, I can definitely not say I didn't let it all out. Okay. I talked. I fucking talked. No one's going to say there's not enough footage of Amit talking when I die. I started listening to my debate speeches back in 2015 aggressively. So I would record my debate round and I would listen back to it. And I got obsessed with like listening to myself over and over again. I know that sounds super narcissistic, but really it was a question of I wanted to get better. And so I was a perfectionist, dude. If I messed up something little, I'd be like, fuck, that's just like, that was like, even on the market open, when I listen back sometimes and I mess up something, I was like, oh, that's like, it's annoying, dude. It's like, I don't like it, you know? So I try to be more perfectionist than not when it comes to this. So especially when I'm landing the jokes, because the jokes are obviously very important. You got to hit the punchline on those. So I think I started listening to myself so much when I was in high school that it became like a thing where I listened to myself speak. And obviously then you learn to speak a lot in debate. And now I do this for a living. So that's why I guess we keep doing it. We'll do it live. Yep. That's it. We'll do it live. You know, I thought about this. Let me ask you guys a question. Would you rather think, let's say this becomes a 30-year career for me, doing it independently through YouTube. Do you think that is more respectable? Or do you think having my own primetime show on CNBC or Bloomberg for 30 years is more respectful? What do you think? What do you think the people would respect more? Like, let's say legit 30 years, bro, we're doing it on the stream. Let's say the audience gets to 20, 30, 40, 50,000 eventually, just on YouTube alone. What's more respectable as the camera dies? See, this doesn't happen on CNBC. They have a much different production. But because I thought about it and I'm like, imagine CNBC or Bloomberg came to me and they're like, hey, we see what you've built on YouTube. Let's give you a primetime 7:00 show where you discuss the markets. And this hasn't happened, by the way. But I was just thinking, like, if they come to me with that offer, I feel like I would crush it, but I feel like it would take away from the authenticity of doing a stream. And a stream is what makes this fun, not reading from a teleprompter and cutting off guests quick because you have to go to an ad break, you know, not being able to say, I need to liquidate my balls. Like, if I can't say that stuff, I don't think it's me. Owning a liquor store is more respectable. I agree. And so it's like, I don't know, dude. Like, I've thought about it and I'm just like, that's just like, because some friends were like, yo, dude, maybe that's your trajectory. Like, you have like a full show. And I'm just like, but dude, it wouldn't be the same. Like it wouldn't, when you're live streaming the market crashing, like we did on Monday, even if it's only 2,000 people, which is crazy to say only 2,000 people versus like the 50,000 people that CNBC gets or whatever, it feels more real. It feels like it's a real community. Palantir 2811. And it's just cooler, you know, versus like having some corporate show. So we can definitely upgrade the set, get a studio, get the lighting, make sure the camera doesn't die. We can do a lot of upgrades internally, but I think going corporate is not fun. Now the money would obviously be much better. You guys know these streams make like $60. Like I showed you guys the ad revenue. Like it makes like $60, $70. It's really not about the money on this. It's about building a community, building the attention. Obviously, it's nice to like get paid for these, but you know, I would imagine the CNBC anchors do like Becky Quick. She makes like $6 million a year. Andrew Ross Sorkin, I think he makes $8 million a year. Like these guys make big money. Now they can't trade stocks. That's the other thing that would suck, dude. I don't think you're allowed to trade stocks. Because you're talking about it all day in that like corporate CNBC environment. Yeah, he gets paid $12 million a year, Andrew Ross Sorkin. $12 million a year. You can own like ETFs and stuff, but you can't actually like buy options or anything like that. And that would also suck because that's not fun. I want to be able to like actually purchase equities. So, and cable is dying. That's another thing. That's the other thing. Cable is dying. Cable is, I think Squawk in the Box every morning, the one with Becky, Joe, and Andrew, they still get 100,000 a day viewers. But I imagine years ago, dude, it was closer to 500,000. And because people just, I mean, they have so many ways to get the news. They don't need to go to CNBC. I still like tuning in, you know, and obviously that's like the premier place where you get interviews and stuff like that. But you know, a lot of people have replaced it for other types of content like this stream. And so it's hard. It's hard to compete in that environment. Twitter pays you $12,000 a year. You're a pro too. Yeah, exactly. Twitter pays me $12,000. At $12 million a year, I don't need to invest. Agreed, but I feel like I'm a junkie, dude. I don't want to just make $12 million. I want to like invest. Like if I make $12 million and I just have to look at it sitting in an account in a mutual fund, dude, that would be so. Dude, if I had 12 million, the amount of like shit I'd be doing in the markets, I'd be having fun, bro. I'd be selling like 50,000 worth of puts. Like I'd be doing crazy shit while maintaining, you know, a good 2% of it in the SPY. No, I'm just kidding. More like 50% of it in the SPY, right? The other 50%, we're going to town. We're having some fucking fun, dude. Give me $6 million. We're going to do some stuff. And if I'm not a horrible investor, hopefully I can not burn $6 million by, you know, selling puts on good companies or something like that. But it would be fun, dude. So I would not want to have that much money without having fun. And maybe I'm just saying that because I don't have 12 million in cash right now, but I feel like it would be boring not being able to do anything with the money. Like imagine looking at all these names, be like, man, I really want to buy the dip on Nvidia at 90, but I can't because I have to go on CNBC every day. I don't know. That would suck. Amit, are we going to lose 10% today on Robinhood? I don't know, man. We'll see. We will see. I am sticking my head on the limb. I don't even know if that's the right saying. I think 22 after earnings. I'm probably going to be wrong about that, but I do think it gaps back up. I think the numbers are good enough to justify it. Now, granted, if we go to 19 or 20, I wouldn't be sad about that either, but then we have to hold that and wait till this whole Japan thing goes away so that we can keep going up. The good thing is we have another quarter as well. We have Q3. And so the July data on Robinhood is going to let us know if they're performing well in July. The only worry I have of Robinhood in July is that they took away the 1% brokerage transfer for Robinhood. So they ended that June 28th. So the only fear I have is do they come up short in deposits because obviously they're not giving away a ton of free money anymore to transfer your brokerage. That's one concern I have. Number two, they were number 30 on the App Store for the majority of the month in July. 2 days ago, they went to number 11. I don't know what happened. I don't know if the market crashed and people started downloading Robinhood or they started ramping up the advertising, but they went from number 30 to 11 literally a couple days ago. And I was like, okay, so August is off to a good start. But July, it was like, we weren't in the top 20 for the majority of August or July. So those are my two concerns about the July data. And we'll see today if there's a slowing down in July. If there is, then maybe Q3 won't be the best. And maybe we have to reevaluate the thesis, at least in the short term. Obviously, long term is long term, but short term, you have to think about it differently. So we'll see. The data today is going to be very, very important. And we will see what happens. I would put as much as I need per month into a dividend ETF, 30% in QQQ SPY, and the rest will be play money. Yeah, I'll do the same thing. And if you believe tech's a winner and you put it in tech, then which the SPY is basically tech, even though QQQ is more heavyweighted tech, then you're really not missing out on a ton of upside over the next decade. So we will see. We will see. All right, I think that's it for me. I'll be back at 3:30-ish for earnings. I think I'll have some guests. Would you guys want to join stream with me and Tanner? Would you want that? I think Tanner and I might do it together. Tanner's a Robinhood bull as well. He bought Robinhood last quarter. It's at the same price he bought it at last quarter. So if you guys want me and Tanner together, I think I'll get with him. And we will see what Vlad has in store for us at 4 p.m. and see if he can execute here. Okay, word of the day. Let's do word of the day. Word of the day is he's a Shopify bull too. Yeah, he is a Shopify bull. He's been big on Shopify. Well, he's from Canada too, so he loves Shopify. It's like not one of the only companies, but one of the only like real tech companies in Canada. So Shopify has done well. Okay, word of the day is called rubberneck.
Rubberneck.
To look about or stare with great curiosity. I thought rubberneck meant something different, but I'm not going to say what I think it meant. I tried not to rubberneck at the commotion in the restaurant, but found it difficult to resist. The highway traffic was caused by drivers slowing down to rubberneck at the accident. Dude, this word, you guys know what I'm thinking. This is just one of those words, bro. I'm not even going to say what I'm thinking, but this word sounds like a certain type of word. That's all. I like this word. Oh my God. Rubberneck, bro. Rubberneck. You know what I did? I rubbernecked a Cybertruck the other day. By the way, there's a Cybertruck in my neighborhood. I was on the highway the other day, 60 miles an hour. Cybertruck comes by. I was rubbernecking it. I was looking at it. Dude, this word sounds so interesting. And then yesterday I was walking through my neighborhood. Boom, I see a Cybertruck in the driveway. I didn't go up to it because I didn't want to go on someone's property and like touch their car, but like I was like, wow, Cybertruck. There we go. Like I still haven't seen one in person. Derek sends me videos all the time of him in his fucking Cybertruck. So I really want to see that car. I want to drive it one day. I want to see what it looks like. But every time I see the Cybertruck on the street, we rubberneck to see the Cybertruck. So there you go. Similar to choke my chicken. That's what I was thinking. Dude, rubberneck sounds a little bit more like, there's a different phrase that rubberneck reminded me of more than just staring at. But There we go. All right. That's it for me. Thank you, everybody. We'll be live 3:30, probably me and Tanner. And let's get ready for Robinhood. Let's see what they can do. And I think Vlad's got us. Let's see how it plays out. Thank you, everybody. I'll see you in a few hours. Bye, everyone. Have a good one.